Okay, good evening everyone. Welcome to Byju's Exam Prep IAS. This is Sham Kagur here. Now, before I start the discussion, if there is no issue with the sound, can you please give me a thumbs up? Let me know that I'm audible to you so that we can start the discussion. Done. Thanks a lot. So let's start. Yesterday, what we have discussed, continued the discussion in the banking sector. Correct? We continued with the discussion in the banking sector. Yesterday, we started with the concept of NPA, non-performing assets. NPA, non-performing assets. Now, what is an NPA? You take a loan and do not repay for 90 days from the due date. I'll repeat the statement. You take a loan and you do not repay for 90 days from the due date. Then basically that is called as non-performing asset. Okay, non-performing asset. In case of non-performing asset, we'll classify these NPAs again under three heads. One is called as a substandard. What do you mean by substandard NPA? Right, whenever an NPA or an account becomes an NPA for the first 12 months, it is called as a substandard. Then after 12 months, the account which is an NPA will be classified as a doubtful NPA. That is for the next 3 years. And after that, right after that, it is classified as a loss-making NPA. And before classifying it as NPA, right, if you keep on repaying, if you repay the loan very promptly, if you repay the loan back to the bank, then it is basically referred as a standard asset. Standard asset. Otherwise, for the first 30 days, right, SMA 0, special mention account 0. For the next 30 days, SMA 1. And for the next 30 days, that is from 61 to 90 days, it will be classified as SMA 2. After that, we have discussed if NPAs are very high, what is the problem? Correct? If NPAs are very high, what is the problem? Before that, why the NPAs are very high? Right? For example, the reasons are the slowdown in the domestic market, slowdown in the international market, which has affected the exports from India, right, etc., etc. So there are various factors which have contributed to growth of NPAs, higher NPAs in the domestic market. Now the issue is if the NPAs are higher, what is the problem? Right? What will the problem if NPAs are very high? The issues are that the bank's profitability will come down. Banks might start incurring losses also, which will affect their lending activity. They will start charging higher interest rates, right, which will affect investments in the market, which will have a limiting impact on, right, let's say the overall growth prospect of Indian economy. Investor confidence will fall down, etc. These are the issues. After that, we have discussed what kind of reforms have been implemented by the government in order to address the issue of non-performing asset. What reforms? The best reform is Insolvency and Bankruptcy Code, IBC, Insolvency and Bankruptcy Code. So IBC has been implemented, which will basically take care of the NPAs issue. Whenever NPAs are getting created, the lenders can approach the NCLT and get their basically application filed and get the basic loan amount back. Again, when I say loan amount, not the complete amount, because we have discussed this yesterday. Recovery rates are very, very low even under IBC. After that, we have discussed a concept of NARCL, National Asset Reconstruction Company Limited. It is a bad bank which has been set up, which has been promoted by Government of India. NARCL has two components. One is the NARCL and the second one is IDRC. NARCL majorly owned by public sector banks, IDRC majorly owned by private sector banks. Please remember that. Right, and what is the model that we are following, what is the critical evaluation, what we are expecting out of it, what is the problem with the model, all of that we have discussed yesterday. After that, we discussed concept of NABFID, National Bank for Financing Infrastructure Development. NABFID is basically a development bank which has been proposed and set up by Government of India. And what is the use of a development bank? It will promote, give loans and promote development of infrastructure. And that is the role of NABFID. Right now, 100% of NABFID is owned by Government of India. It is owned by Government of India. But government has stated that over a period of time, they will reduce the ownership to 26%. They will reduce the ownership to 26%. Now, after that, we have discussed cooperative banking in India. cooperative banking, right? Cooperatives are basically whenever more than 10 people, 10 or more than 10 people above the age of 18 years will come together to achieve a common objective. They will form a cooperative. Cooperatives, right, are registered with the state government if it is a single state cooperative, are registered with the central government if these are multi-state cooperatives. In case of cooperative banking, please remember the two-tier structure: urban cooperatives, rural cooperatives. In urban cooperatives, they can be scheduled, they can be non-scheduled, they can be single state, they can be multi-state urban cooperative banks as well. Then in case of rural cooperatives, there are two parts again, based on whether they will give loans for the short duration, medium duration, or for the long duration. Whenever they will provide loans for short duration, we have a three level structure. At the highest level, we have a state cooperative bank. Below that, we have a district central cooperative bank. And below that, at the lowest level, we have primary agriculture credit societies. And on the right side, we basically have the state cooperative agriculture and rural development bank, and district cooperative agriculture and rural development bank. S card B, below that P card B. Okay, so that is basically the concept of cooperative structure. Then we have discussed 1966, right? More than 1 lakh capital, right? That is paid up equity, right? So any cooperative that had a paid up equity capital of more than 1 lakh was brought under the Banking Regulation Act, which meant that they will come under the regulation of Reserve Bank of India. Reserve Bank of India was concerned because there is a dual regulation, because cooperatives are registered with the state government, elections are conducted, the board of directors may or may not have expertise in banking, so they are dealing with the money that is collected from the customers. That is a precise reason Government of India has amended Banking Regulation Act in 2020, wherein lot of powers have been given to the Reserve Bank of India. Then after that, we have discussed right, the idea of the small finance bank as well as payment banks. And before discussing small finance and payment bank, we discussed a concept called as financial inclusion. Financial inclusion refers to process followed by the government to provide financial services to the needy people in a cost effective manner. Correct? Providing services to the needy people. Needy people is very important, right? So providing services, financial services to the needy people in a cost effective manner, that is called as a financial inclusion. The best example for a financial inclusion that we have discussed yesterday is a banking correspondent model implemented by Reserve Bank of India post 2006 in India, and the Pradhan Mantri Jan Dhan Yojana. Apart from that, there are many other initiatives also which have been implemented to promote financial inclusion in India. So we have discussed what is a small finance bank, what is the importance of it, why RBI is promoting it, what is the PSL criteria for small finance bank. Then we have discussed payment bank, what are the features, are they allowed to collect a deposit? If yes, how much? Are they allowed to give loans? Are they allowed to provide credit cards, etc., etc.? So this is what we have discussed yesterday. Small concepts are left out in banking. Let's finish it off, then we can go to the next chapter. Certain questions in banking are left out, we'll finish those questions today, don't worry. Now, certain important committees, starting with Narsimham committee. Now, what are the recommendations of Narsimham committee? Please understand point number 1. There are two Narsimham committees which have been set up. I'll repeat the statement. Narsimham committee has been set up two times, right? That is basically one in 1991, second one in 1998. Any problem with this? Narsimham committee was set up two times, one in 1991, second one in 1998. In famous parlance, right, famously these are referred to as Narsimham 1 committee and Narsimham 2 committee. I'm using N1 and N2, Narsimham 1, Narsimham 2. And instead of Narsimham 1 and Narsimham 2, they will also use a different name for same committee. They will call this as Committee on Financial Services. Committee on Financial Services, CFS, Committee on Financial Services. So they will simply say CFS 1, CFS 1 and CFS 2, Committee on Financial Services. So Committee on Financial Services is the same as Narsimham 1 committee, which was set up in 1991. Committee on Financial Services 2 is the same as Narsimham 2 committee, which was set up in 1998. Okay, so many of you will be confused. Why, sir? Why two different names? My dear, one is based on what is the work, based on what area they are going to provide the recommendation, and another one name is based on the committee chairman, the chairman of the committee. So come back to the discussion here. Narsimham 1 committee, 1991. What were the recommendations? What were the recommendations of Narsimham 1 committee? No further branch licensing. Right, we'll go point by point. No further branch licensing. What is the concept of branch licensing? Even today, imagine a bank is there. The bank wants to open 100 branches in India. They will have to take approval from RBI. They will have to get the approval from RBI. Even RBI has a mandate that some of the branches that this bank will open, some of these branches, they will have to open in villages. Right, so this policy is called as a branch licensing policy. This committee stated that we should not follow branch licensing policy. Now many of you will ask me, why, sir? Why should we not follow branch licensing? My dear, you please tell me, if you are the owner of the bank, you want to open 100 branches, don't you think you should have the right to decide where you want to open them? Please do let me know. If you are the owner of the bank and you want to open 100 branches, don't you want to have the right to decide where you want to open these 100 branches? Of course, yes. Right? You should be given the right. You should be given that particular power. Right? So that is the reason this committee stated that we should not follow branch licensing policy. But RBI says we will not do that, because argument of RBI is, if I give the power to you, you will not open any branches in villages. You'll open all the branches in cities only. Second, please do not go for nationalization. No further nationalization is required. Why? We have many public sector banks now. Rather than having more of public sector banks, we should promote competition. We should promote competition. And how can you promote competition? Not by having more PSPs, but along with the PSPs, what if you promote private sector banks? What if you allow foreign banks to come into India and start operating in India? That will promote competition. So do not go for nationalization. That is the reason 1980 was the second round of nationalization. After that, no nationalization has been done in the banking sector. Third one, priority sector lending should be brought down to 10%. Even today, it is not down to 10%. The argument of the committee was that PSL, the sectors which are covered under PSL are very risky. Right? Yes or no? If you remember the sectors, do let me know. The sectors which are covered under PSL are risky sectors. The bank should be allowed to decide to which sector they want to provide how much amount of loans. The bank should decide it, not the government, not the RBI. But even then, right, even today, PSL has not been brought on. PSL, how much is the rate of PSL? Can I say generally, overall for most of the banks in India, PSL is 40%. Private sector lending is 40%. Of course, there are certain banks where the PSL numbers are higher, but overall, generally, it is 40%. For small finance banks, it is 75%. For regional rural banks, it is 75%. But for most of the banks in India, it is 40%. Reduce SLR as well as CRR. If you reduce SLR and CRR, what is the impact of it? More and more reserves, right, will be available for the banks to use it for lending purposes. In fact, earlier, I repeat, earlier, CRR plus SLR, CRR cash reserve ratio plus SLR statutory liquid ratio put together was more than 60% at one point of time. Was more than 60% at one point of time. And what we have done now, over a period of time, we have reduced both the CRR and we have reduced the SLR also. Today, if you check the data, right, if you check the data, both the CRR as well as SLR, if you put together both the numbers, it will hardly be somewhere around 24 to 25%. It will be less than 24 to 25% only. So from more than 50%, 60%, we have reduced the CRR and SLR to free up more resources to free up more money which can be utilized by the bank for lending purposes. Next, computerization of the banks. Please tell me, how many of you visited a bank branch, and in the bank branch, did you see officials in the banks working on computers? Yes or no? Anybody in the classroom who says, sir, I went to a bank and there were no computers in the bank. Everything was written in paper, right? They used to, earlier, they used to have a khata book, right? Bahir khata book, very, very large books like this, red color binders. Now we don't have all of it. Everything will be done using computers only, using technology only. So, computerization of the banking sector has also been done now. Debt recovery tribunals must be set up. Please tell me, do you remember the concept of debt recovery tribunals? Do we have debt recovery tribunals in India? Answer is yes. Right? Answer is yes. Okay. Right. So debt recovery tribunals have been set up. One of the students says, sir, in cooperative banks, ledgers are used. My dear, please check the newspaper. Now, Government of India is trying to computerize even cooperative banks, right? Because cooperative banks investment is lesser, customer base comparatively is lesser, profit motive is lesser. That's the reason there is a lag. There is, right, a lag in the cooperative sector. But even in cooperative sectors, government is pushing for digitalization now. Okay, next, setting up of asset reconstruction companies. ARCs are working in India. All of you remember, yesterday only we have discussed. ARCs are operating in India. Yes, more than 20 ARCs are there in India. So the concept of ARC establishment was recommended by whom in India? It was recommended by Narsimham Committee. Next, private sector entry should be allowed into banking sector, right? Private sector banks have been allowed now. Banks should be allowed to raise capital by issue of shares, right? Have you seen Bank of Baroda shares in the stock market? State Bank of India shares, Punjab National Bank shares. So the banks have been allowed to issue shares and raise capital, right? They have been allowed to issue shares. They have been allowed to even issue bonds now. Okay, for example, do you remember additional tier 1 bond? Additional tier 1 bond. Monday we have discussed this. Tier 2 bonds, correct? Right. So many types of bonds. Now the banks are allowed to issue bonds, shares, and raise capital from the market. And this committee recommended that we should have a 4 level or a 4 tier structure in banking. A 4 level structure or a 4 tier structure in banking. At the top, there will be 3 to 4 very large banks. Below 3 to 4 large banks, in the second level, we will have around 8 to 10 nationalized banks. And below nationalized banks, we will have local banks as well as rural banks. This was a recommendation that was provided by Narsimham Committee to arrange banking sector in India. And the argument was very simple, right? Do not complicate all of it. The argument of the committee was that every level of banking, their focus will be different. Their business will be different. For example, when you talk about rural banks, the target of rural banks will be agriculture sector, will be farmers. And when you talk about 3 to 4 large banks, their target will be infrastructure growth, development of infrastructure in India. So different levels were recommended and their businesses were supposed to be different so that every level will have its own, right, business areas. That was the first set of recommendations, Narsimham Committee 1991. Now, second set of recommendations 1998. Second set of recommendations 1998. What were the recommendations in the second round? Committee on Financial Services 2. What were the recommendations? Point number 1. It recommended Credit Information Bureau. It recommended establishment of Credit Information Bureau. Now, what is this Credit Information Bureau? Please tell me, have you people come across CIBIL score? Yes or no? Have you people come across CIBIL score, right? 890, 870, right? Or 840, 640, etc. CIBIL score simply means what is the credit worthiness of a borrower. Credit worthiness, for example, you go to a bank, apply for a loan. Please tell me, how will the bank find out whether you are a good borrower or a bad borrower? You are a trustworthy borrower or not a trustworthy borrower? How will the bank come to know? You might tell the bank, sir, I'm preparing for UPSC. How can you simply say, I will not repay the loan? I want to become civil servant. Manager says, sir, I'm not worried about it. Tell me, what is your civil score? Tell me, what is your civil score? You might tell 100 stories to the bank. Bank simply says, please tell me, have you taken loans in the past? If yes, have you repaid the loans in the past? Right now, basically, argument of civil score is, civil basically stands for Credit Information Bureau of India Limited. Civil stands for Credit Information Bureau of India Limited. So whenever you take, right, let's say a consumer loan, for example, many of you must have experienced this. Many, I don't expect all of you to have this kind of experience. Many of you, you want to purchase, let's say some product, electronic product from the market. Don't you think Bajaj Finance will tell you, I will give you EMI option, correct? You want to purchase a car, a bank will tell you, I will give you EMI option. You have a credit card, you have a housing loan, you have an education loan. So I hope you understand there are different measures, right? Or there are different types of loans that we have taken. Now, whether have we repaid, did I repay the loan on timely basis? Did I default on the repayment? Did I pay the loan completely? Everything is mentioned in the form of a civil score. Higher the civil score, up to 900. Higher the civil score, it is good for the customer. Very simple. Higher the civil score, it is good for the customer. Meaning what? Imagine I will come to you, you are a bank manager, I will apply for a loan, and my civil score, let's say, is 890. Very, very good civil score, by the way. 890 is a very, very good civil score, which means you can trust and say, I have taken the loans in the past and I've repaid the loans on prompt basis. That is the reason civil score is important. You apply for a loan from anybody in the market. Again, I'm talking about formal lending. Don't say, sir, I will go to a money lender. I will go to a zamindar in my village. Will they ask me a civil score? No, right? Not informal. I'm talking about formal system. Whether you go to, right, let's say NBFC, whether you go to a bank, etc., right? They will ask for a civil score. Done. So setting up of Credit Information Bureau was recommended by Narsimham Committee too. Second one, merger of strong banks to create a much bigger bank. They call this as a mega bank. Right? The reason was simple. They'll be able to provide long-term loans, bigger loans. Their clientele would be different, etc. Next one, weaker banks should be asked to conduct narrow banking. Weaker banks should be asked to conduct a narrow banking, right? What is this concept of a narrow banking? Imagine there is a bank which is incurring lot of losses. The bank is collecting deposits of the customers. If I allow the bank to continue to operate in the same way, don't you think in the future the losses could further widen? Let me know. I'll repeat it again. A bank is incurring lot of losses. They are collecting, right, deposits of the customers. If RBI doesn't intervene and impose any restriction on the bank, don't you think the bank will again use the deposit to give loan, incur more losses? Possibility is very high. So what can be done? There's a concept called as a narrow banking. What is a narrow banking? The RBI will ask the bank not to use the deposit to give loan, rather will ask them to invest in government securities. RBI will simply ask the bank not to give loans, not to give any loan further, because the losses are very high. Further, they might incur losses. Rather than that, invest in government securities. Government securities are very safe. All of you will agree with me? Government securities are very, very safe. So rather than giving a loan where you might incur losses, right, risk is very high, use the deposit to invest in government securities. This is called as a narrow banking. Narrow means very limited options are there for the bank. So weaker banks should be asked to conduct a narrow banking. Greater autonomy to the bank board. Bank boards should decide, right? Bank board means generally the board members are there, right? The CMD is there, CEO, etc. More powers should be given to the bank boards. In decision making process, more powers should be there with the bank board. And finally, regulator and owner should be different. Regulator should not be the owner in the banking sector. Many of you ask me, sir, what is this? A regulator should not be the owner. Simple question to you. Who is the regulator of banking system in India? Start answering. It's not difficult. All of you know this now. Who is the regulator of banking sector? Reserve Bank of India. Who owns Reserve Bank of India? Who owns Reserve Bank of India? Government of India. Now, on one side, Government of India through RBI will regulate banks. Government of India through RBI will regulate banks. And on the other side, Government of India also owns public sector banks. Is there a conflict of interest or not? Let me know. Is there a conflict of interest? Government of India through RBI is regulating banking sector. On the other side, Government of India itself is owning public sector banks. So there is always an issue of conflict of interest. So that was the condition there. Regulator should not be the owner because the regulator's role is different. Owners' requirements are different. Right? Both should not be one and the same. So these are some of the recommendations of Narsimham Committee 2 or Committee on Financial Services, which was set up in 1998. Okay. Now, apart from this, many other committees will keep on appearing in the newspaper. My recommendation is try to remember the most important committees which are there in the newspaper. So far, right, whether good or bad, right, don't worry about it. So far, if you look at the tendency of UPSC, they have not asked a question on banking committees. You can check last 5 years, UPSC has not asked a question on banking committees. But you do not know when UPSC will pick up a question, you don't know. Suddenly, if there is a committee recommendation which will appear in the newspaper, please pick it up. Please pick it up. UPSC has the knack of asking unpredictable questions like this. Okay. Now, last concept in the banking. In fact, it is not banking now. Last concept, NBFC in this chapter. Point number one, what is an NBFC? NBFCs are non-banking financial companies. NBFCs are non-banking financial companies. Non-banking financial companies. This is point number one. Now, based on this itself, are 2 points clear to you? I'll repeat it. Based on the name itself, 2 points should be very clear to you. What are the 2 points? One, NBFCs are not banks. Look at the name. NBFCs are not banks. Second, NBFCs are companies. I'll repeat it, right? Look at the name. It should be pretty clear to you that NBFCs are not banks. Why? Look at the name, non-bank. NBFCs are not banks. Second one is NBFCs are basically companies. Now, before I go forward, let me give you certain important differences between what is an NBFC, what is a bank. What is basically the difference between both of them? Let's compare. Let's compare. On one side, I will write bank. On the other side, I'll write NBFCs. On one side, I'll write bank. On the other side, I'll write NBFCs. The banks are basically registered and set up under Banking Regulation Act. Banking Regulation Act. Okay, that is a point number one. Whereas NBFCs are set up under Companies Act. These are set up under Companies Act. Right? One is a Banking Act, second one is a Companies Act. Second very important point. The banks can collect any type of deposits. Again, I'm generally talking about bank. Don't say, sir, what about payment bank? There's a restriction there. Generally, okay, a bank can collect any type of deposit. Any type of deposit. Any type means what? it can collect demand deposits as well as term deposits. All of you okay with this? They can collect demand deposits as well as term deposits. Whereas NBFCs, there are few NBFCs, classification is there because please understand, NBFCs can be classified as deposit taking NBFCs as well as non-deposit taking NBFC. Non-deposit taking NBFC. Is it okay? I'll repeat it. NBFCs can be classified as deposit taking NBFC, non-deposit taking NBFC. Before you start asking any example, have you heard of Muthoot Finance? Let me know. Those who watch TV, let me know. Have you heard of Bajaj Finance, Reliance Finance, etc.? All of these are nothing but NBFCs only. All of these are nothing but NBFCs only, right? And please understand, there are more than 10,000 NBFCs in India. Don't remember all of them. It's of no importance for UPSC. Don't waste your time. Don't remember all of them. And surprisingly, some of you say, sir, I've not heard of Muthoot, I've not heard of Reliance Capital, I've not heard of Bajaj Finance, etc. My dear, then you're only only one inference. On a lighter note, it simply means you do not watch TV, you do not read newspapers also. Correct? You do not watch TV and you do not read newspapers also. Why? If you are reading newspaper, today's Hindu newspaper, was there an article regarding Reliance Money? Check it by the way. Right? Was there an article regarding Reliance Money? It was there in fact. Okay, again, will UPSC ask you about Reliance Money? Absolutely no, don't waste your time. But again, please understand, read newspapers. My recommendation is read newspapers. In fact, those who have read today's Hindu newspaper, let me know. Was there an article regarding the maritime sector in India? New policy of government of India to promote maritime sector? Whether you have read Hindu newspaper, whether you have read Business Standard, doesn't matter. Whichever newspaper you have read, all the newspapers had this article. One was on maritime sector, right? New policy of government of India to promote maritime sector. Second one, there was in Hindu newspaper, right? Because most of you read Hindu newspaper, I'm quoting Hindu newspaper. In the business page, in the lower part, left side, lower part, was there one article regarding government of India's investment in infrastructure. Government of India's investment in infrastructure. Again, some of you are talking about polity, some of you are talking about right same-sex marriage, legalization, etc. My dear, I'm talking about economics. Let me be restricted to only economics, right? So there was one more article regarding capital expenditure, investment in infrastructure. Very important article. Read it. Important in the sense you can use that particular data, right? Many of you keep on asking, sir, how do I know how much data to use, where should I get the data, etc. Can you quote that data in the exams if there is a question on how government of India is promoting virtuous cycle in the economy? What is the role of government of India in promoting virtuous cycle in the economy? How can you prove that government of India is promoting right more employment? How can you prove that government of India is promoting investment in infrastructure? Data is there right in front of you. From 67 lakh crore rupees between 27 to 2023, 67 lakh crore. Now it is going to be more than double in the next 7 years, that is 2024 to 2031. 143 lakh crore rupees, right? So imagine how much data is available right in front of you, right? It's easier to remember, more than double from 67 to 143 lakh crore rupees. So again, my recommendation is very simple, right? I'm taking a deviation, but don't worry, my recommendation is very simple. Lot of important data you can get it while reading newspapers. For that you will have to read newspapers, by the way. For that you will have to read newspapers. Okay, done. Come back to this. They can collect, that is banks can collect, right, demand deposits as well as time deposits. Whereas NBFCs, deposit taking NBFCs are allowed to collect only term deposits. NBFCs which are allowed to collect deposits, that is deposit taking NBFCs, they are allowed to collect only term deposits, and that too the term deposits should be in the range of 12 months to 60 months. So that is another very important difference. Third very important difference, the deposits which you keep in the banks, the deposits are insured, correct? The deposits are insured. Do you remember DICGC? Deposit Insurance Credit Guarantee Corporation. So deposits that you keep in a bank, these are insured. What about deposits in NBFC? Do you think DICGC will provide insurance for deposits in NBFCs? No, deposits are not insured. Not insured. Deposits are not insured. Why? It is not a bank. It is not a bank. That's a very simple reason. It's not a bank. DICGC will cover only banks. NBFCs are not banks. Fourth very important difference. The banks are part of payment and settlement system. I'll give you example. Have some patience. Payment and settlement system. Banks are part of payment and settlement system, whereas NBFCs are not a part of payment and settlement system. Payment and settlement system. Now, what is this payment and settlement system? Let me explain. All of you heard of NEFT? Let me know. Heard or not? NEFT, National Electronic Fund Transfer. RTGS, and more than that, let me ask you a very simple question. How many of you use internet mobile banking app or internet mobile banking? Because nowadays this is very famous, digital technology. So whenever you are using right, let's say fund transfers, whenever you want to transfer funds, right, you will basically use whenever you use an app, mobile app of a bank, you can transfer the funds using IMPS, right? You can use RTGS, you can use NEFT. These are called as fund transfer methodologies. Fund transfer methodologies. That is, you have an account in a Bank of Baroda or a State Bank of India, or for that matter, ICICI Bank. You can transfer funds from one account to another account, irrespective of which bank it is. You can transfer the funds. This is called as a payment and settlement system. Payment and settlement system. NEFT, RTGS, all these are the examples of payment and settlement system. Banks are a part of payment and settlement system. NBFCs are not a part of payment and settlement system. Right? You cannot transfer funds from NBFCs using RTGS. No, not allowed. You cannot transfer funds using NEFT through, right, the NBFCs. They are not part of a payment and settlement system. And fifth one, right, the difference between a bank and NBFC is the banks can issue checks. Banks can issue checks. Banks can issue checks, right? For example, you open a bank in, let's say, SBI. SBI will issue a checkbook to you. I'm pretty sure those who have an account will have a checkbook, right? Checkbook issued by SBI, State Bank of India. So I'll use a statement, technical statement. The banks can issue checks with their name. In their name, the banks can issue checks in their name. Whereas NBFCs cannot issue checks. Cannot issue checks. NBFCs cannot issue checks. Right? So NBFCs are not allowed to issue checks. Right? Again, the reason is simple. NBFCs are not part of a payment and settlement system. So these are certain very important differences between a bank as well as NBFC. Now let me focus on NBFC. NBFCs, point number one, are registered. These are non-banking financial companies, are registered under Companies Act. Point number one. Point number two, these have been kept under the regulatory control of Reserve Bank of India from 1997. Any NBFC that wants to start operating in India, they will have to get a certificate of registration from Reserve Bank of India. They will have to get a certificate of registration. But please understand, next point, the deposit taking NBFCs must be registered with Reserve Bank of India, and some of the NBFCs are regulated by other agencies as well. Now you will ask me why? Why is that? Why is the point say there are other regulatory bodies? I'll ask you a very simple question. Mutual fund companies. Please don't tell me that you have not even come across mutual fund companies now. Mutual fund companies. Then it also means you are not watching World Cup now. Right? You are not watching World Cup also now. Right? So mutual fund companies. In newspapers they are there, in right news they are there, right, in advertisements they are there, etc., etc. Mutual funds sahi hai, right, etc., etc. So argument is simple. Mutual fund companies, it's a type of NBFC, will come under regulation of what? Mutual fund companies will come under regulation of SEBI, Securities Exchange Board of India. Right? Insurance companies are there in India. Lot of insurance companies are there, correct? Insurance companies will not come under regulation of RBI because RBI is a banking regulator. It is not an expert in the insurance sector. So insurance companies will come under regulation of IRDAI, Insurance Regulatory Development Authority of India. Insurance Regulatory Development Authority of India. IRDAI is there. Pension fund companies are there. They will come under the regulation of PFRDA, Pension Fund Regulatory Development Authority of India. So I hope you understand the logic here. No doubt NBFCs are there, right? Technically, as per the law, from 1997, they have come under regulation of RBI. But RBI is an expert in banking sector. It can more of a handle any deposit taking NBFC. It can regulate that. What about other types of NBFCs? Insurance companies, pension companies, stock market companies. There are different regulators which will regulate all of these right entities as such, or NBFCs. Now, some of you are asking what is the importance. I'll come back to this, don't worry. Some of you are asking what is the importance of NBFCs? Why do we have NBFCs? Point number one, NBFCs are generally referred to as shadow banks. These are referred to as shadow banks or shadow banking, they will say. Why? Banks will provide loans. Banks will provide loans. Banks will invest in the economy. Banks will collect the deposits. There are a lot of NBFCs which will collect the deposits. Lot of NBFCs are there which will provide loans to you. Lot of NBFCs are there which will invest in the stock market. Lot of NBFCs which will invest and develop infrastructure also. So I hope you understand there are different types of NBFCs which are doing similar work as done by the banks itself. That is the reason these are referred as shadow banking. Now, what is the importance of NBFCs? Point number one, it will provide loans to certain borrowers who are generally found to be very risky and they find it very difficult to get a loan from a bank. What do you mean by that? Let me start with a very simple example. Imagine I want to take a loan from a bank. I will come to you. I will apply for a loan. You will ask for my CIBIL score, and my CIBIL score is, let's say, 450. Okay, my CIBIL score is 450. If you remember earlier, I said higher the CIBIL score, it is good for the customer. The banks will have more trust on the customer, and it also means customers are good in terms of repayment of the loans. Now you tell me, you are the manager of a bank. If my CIBIL score is 450, don't you think you are taking a very high amount of risk by giving loan to me? Point number one. Are you not taking very high amount of a risk by giving loan to me? And many of the times banks will simply say, sir, because you are right, because your CIBIL score is very less, sorry, I will not be able to give you loan. Now what should I do? Should I simply give up? You don't want to give me a loan, should I give up? No, I will not give up. What I'll do, I will take all the documents, go to NBFC. I will take the same documents, go to a non-banking financial company. A non-banking financial company says, okay, you want to take a loan? I will give you loan. Your CIBIL score is less. No issues, I'll give you loan, but I will charge you higher rate of interest. I will charge you higher rate of interest. Right? So tell me, is NBFC promoting access to credit for risky borrowers in the market? Yes or no? Is NBFC promoting access? Is it not making it available to risky borrowers, unbanked borrowers in the market? Of course, yes. Again, please understand. Some of you will say, "But sir, I'm paying more rate of interest, etc." That is the problem. It's a problem. No issues. It's a problem because nobody wants to give you loan. If NBFC will give you a loan, they will charge a higher rate of interest. Of course, yes, they will charge a higher rate of interest, right? Because they're taking a very high amount of risk. So, one, it will provide loans to certain borrowers who are considered to be unbanked or risky borrowers. Now, second one, just think of it carefully. If I take a loan, imagine I'm a risky borrower, CIBIL score is lesser. I'll take a loan and I will repay the loan to you. I will repay the loan to you. Now, because I've repaid the loan very promptly back to you, will my CIBIL score start improving, start increasing or not? Let me know. If I take a loan and start repaying the loan back to you, no default, nothing, I will repay the loan completely within stipulated time. Because I'm a good borrower now, automatically my CIBIL score will start improving. My CIBIL score will start increasing. Now tell me, with the higher CIBIL score in future, can I take loan from the banks? Let me know. With the better CIBIL score in the future, can I take loans from the banks? Of course, yes. Many of you ask me, sir, why will you take loan again? My dear, what if I'm owner of a small business? What if I'm owner of a small business? I'll keep on taking loans repeatedly in the market. So argument is yes. Look at the third point here. Look at third point. Unbanked borrowers can become bank borrowers in the future with the help of NBFCs. When they take a loan, they will repay, right? Their CIBIL score will start improving. Now they can take loans from the banks, right? So lending to risky borrowers, unbanked borrowers can become bank borrowers. Third, many of the NBFCs are specialized to provide loans to specific sector. For example, Manappuram. Have you heard of this? Manappuram. Manappuram, right? Many of these are providing loans only for gold. Gold loans, right? Gold loans. There are many NBFCs which will provide only gold loans. There are many NBFCs which will provide housing loans. There are many NBFCs which will provide vehicle loans. So argument is many of the NBFCs are specialized only in certain specific sector, and that is an advantage for them. Why? Here is a bank. Bank will provide gold loan. Bank will provide vehicle loan. Bank will provide housing loan. Bank will provide agriculture loan. So only one bank will provide all the types of loans. But here, experts, these are experts in a specific sector. These are specialized in only specific sector, right? So many of the NBFCs are specialized to lend in specific sectors only. Next, these will help in creating demand in the market. These will help in increasing investment in the market, right? So have been helpful in creating demand as well as investment and also capital formation, right? So these are certain very important reasons why NBFCs are considered to be very important for Indian economy. Having said so, in recent times, one slide I've left out, classification, I'll go back, don't worry. Having said so, in recent times, NBFCs are said to be facing certain issues, right? NBFCs are said to be facing certain issues. What are the issues? One, NBFCs, understand this, just like a bank will face asset liability mismatch. All of you will agree with the concept of asset liability mismatch? NBFC, just like a bank, is facing the issue of asset liability mismatch. Now, again, let me go beyond this. Let me go beyond this. How does the NBFC generate money? How does NBFCs get money? They can collect deposits from customers. Some of the NBFCs are allowed to collect deposits from the customers. NBFCs will issue bonds in the market, borrow from the market. NBFCs can also take loan from banks. NBFCs can also take loans from the banks and right either invest in the market, give loans in the market, etc. etc. This is generally how NBFCs will raise money and use the money in the market. So just like a bank faces the issue of asset liability mismatch, even the NBFCs are facing this issue. Point number two, if NBFCs are providing loans, will there be some of the borrowers who will default on the repayment? Correct. Just like a bank, borrowers will default on the repayment. So here also it can become NPA, non-performing asset. That can also lead to losses incurred by the NBFCs. So funding issue has been a problem. They are finding it very difficult to raise money from the market. If you ask me, sir, how, right? Why are they facing funding issues? My dear, during pandemic, right? Do you think people will be interested in keeping deposits with NBFCs? Will people be interested in keeping deposits with NBFCs? Do you think banks, right, will provide more loans to NBFCs during pandemic? And do you think during pandemic NBFCs will be able to issue more and more bonds, collect money from the market? So the funding became a problem for the NBFCs, has become a problem in recent times. Second one, because of slowdown and recession that Indian economy faced, they have been facing issues of repayment. Many of the borrowers are not repaying the loans. Asset liability mismatch is also a problem. And their lending activities, because of all of it, their lending activities also has been affected. Right. So these are some of the issues faced by non-banking financial companies, NBFCs. Okay. Done. So this is basically the end of NBFCs for you. Just one more point, last point. The classification of NBFC as per the new pattern. New classification has been provided by Reserve Bank of India. Just remember the classification. Now, what is the classification? Reserve Bank of India has classified the NBFCs into four categories. I'll repeat the statement. The NBFCs have been classified, right, by RBI under four categories now. Right, four-way classification has been proposed by RBI. What are the four different classifications? Just apply pyramid structure. All of us in pyramids, all of us in pyramids, right? So again, now at least now you should be very careful about pyramids, right? So in fact, when I talk about pyramids, right, that particular region, right, that is Palestine, Hamas, Israel, right, or Iran for that matter. Today in the newspaper, Business Standard newspaper, right, not other newspapers, Business Standard newspaper, there's a very nice article regarding what will happen to India's imports if Iran will also become a part of this war between Hamas and Israel. I'll repeat the statement. What if even Iran will get or will become a part of it? And there is if you're reading newspapers or watching news etc., you will realize this, right? So most probably Iran will also become part of the war. Again, I'm not confirming it, most probably, because the dynamics are happening in such a way. The argument of that article in the newspapers, those who are asking which newspaper, Business Standard newspaper. Okay, Business Standard newspaper, today's edition only, today's a newspaper. We import a lot of crude oil, we import a lot of LNG as well as crude oil. We are heavily dependent on the import. There is a Strait of Hormuz. Have you come across this? Again, slightly go to geography, read about it. Please read about it. Mapping questions, right? Mapping questions. So at least one question is asked by UPSC. Please be very careful with that. There is a concern that if Iran will become a part of the war now, will also either because of its right policies or because of any other event, even if that becomes part of it, then that particular strait, which is right, which is very very important, which is a very important stretch of waterway to transport, export oil, LNG, etc., that might become restricted, that might be affected. And because we are importing major importers, our imports will become very very costly because of that, right? So please read about that article. If you get it, read it. Otherwise, this Friday when I give you set of articles, I'll just make sure that I will include that particular article as well. Now come back to this particular point, right? So I was talking about pyramid and right, thereby a deviation. Come back to the discussion here. Just remember this particular pyramidal structure. Pyramidal means basically a triangle in this particular situation. In pyramid, can I simply say, as we move from top to the bottom, the size of the pyramid will start increasing? Very simple logical question, by the way. As we move from the top to the bottom, the size of the pyramid will start increasing. Apply the same logic. RBI has given a new classification for NBFCs. The base layer will be right the largest layer. Why I'm writing base layer at the bottom here? Look at the size of the base layer. Can I say, based on the size of the base layer, what is the inference? Most of the NBFCs will be there in the base layer. How do you remember it? Most of the NBFCs will be there in the base layer. What kind of NBFCs? Non-deposit taking NBFCs with asset size of less than 1,000 crore rupee. Now above base layer you will have middle layer. Above base you will have middle layer, and above that you have upper layer, and finally you will have top layer, which right, which will have top layer. Now what is the importance of RBI says NBFCs are very very critical to the economy? Just like banks, even NBFCs are very very critical to the economy, very critical. Why? NBFCs will take right, let's say money of the depositors, collect deposits money. NBFCs will take loan from the banks. NBFCs are giving loans to customers. So just like banking sector, NBFCs are also very critical, right? Very important to the economy. And if you compare between the banks as well as NBFCs, RBI says bank by me compared to NBFCs, right? Banks have got very strong regulations, right? Very strict regulations compared to NBFCs. So RBI says I cannot simply leave NBFCs like this. I will have to increase regulations even on the NBFCs. That is the reason. Please remember this. Until very recently, in case of banks, if you don't repay the loan, your account will become an NPA after 90 days. All of you will agree, in banks, you take a loan and you don't repay the loan, after 90 days, your account will become NPA. Whereas in NBFCs, until very recently, you take a loan and you do not repay it for 180 days. Remember this, for NBFCs, it was 180 days. Right? After 180 days, it will be classified as NPA. RBI said, how is that possible? We cannot have 90 days for the banks. You cannot have 180 days for NBFCs. So what has RBI done? It has changed the regulation now. Even for NBFCs, and now if you do not repay the loan in 90 days, right, it will become an NPA. So I hope you understand the logic here. What RBI says is, for banking sector, regulations are very strict. Whereas NBFCs, even though they are very important, regulations are not so strict. So what I've done, I've introduced a new type of a classification under which, based on in which layer you will fall. I repeat, right, under this new regulation system, based on in which layer you will fall, regulations will be implemented. Which means if you start moving from the bottom part, that is from the base layer to the top layer, more and more strict regulations will be implemented by RBI. More and more strict regulations will be implemented by RBI. And right now, please remember, most of the NBFCs are there in the base layer. Most of the NBFCs are there in the base layer. Top, right? Top around 20 plus NBFCs are there in the upper layer. Top around 20 plus NBFCs are there in the upper layer, right? In the top layer, as of now, no NBFCs are there. I repeat, as of now, no NBFCs have been kept in the top layer. Why? RBI says the biggest NBFCs, top 20 NBFCs, top means in terms of size. The top 20 plus NBFCs, I'll keep it in the upper layer and I will have very strict guidelines for them. I will have very, very strict conditions for them. Even after that, if there is a requirement of more guidelines, then I will shift some of the NBFCs to the top layer, increase more regulation, impose more regulation in case of top category. All of you okay with this classification? Can we go forward? Let me know. All of you okay with this classification? Right. So right now RBI has introduced a new system of classification of NBFCs. Right. Top layer, the upper layer, middle layer, and the base layer. As you keep on moving from the bottom to the top, regulations will keep on increasing. More and more regulations will be imposed. Is it okay? Done? Right. So this is right the discussion regarding current affairs point regarding NBFCs. Now this is the end of the chapter, by the way. This is the end of the chapter. Before I go to the next chapter, questions are there. We'll come back to questions. Don't worry. Before I go to the next chapter, this is a very important chapter. I'll reiterate it. This is very, very important chapter for UPSC exams, especially from prelims perspective. Especially for prelims, lot of questions are asked from this chapter, where most of the questions are from current affairs or a combination of static plus dynamic, etc. Now, what is your duty? What is your duty? You'll have to keep reading newspapers every day and updating newspapers. Updating newspapers. For example, because I'm telling about newspapers, I don't know how many of you have read today's Business Line newspaper. In today's Business Line newspaper, in one of the articles, there was a discussion about monetary policy transmission. There was a discussion about monetary policy transmission. We have discussed monetary policy transmission in the class. Now there was an article, right, regarding monetary policy transmission, and the article was very interesting. I'll give it slightly technical, but read it. Do not try to understand all the concepts in that. That level of understanding is not needed for UPSC. Argument was in recent times, that is from month of May last year till now, RBI has increased, right? RBI has increased repo rate by 250 basis points. RBI has increased repo rate by 250 basis points. That is 2.5%. But lending rates have not increased, right, at the same pace. Lending rates have been increased by a small number, right? Data is there. Don't by heart it. It is of no use. But on the other side, deposit rates, that was very interesting. Deposit rates have increased more than 200 basis points. All of you understand what I'm trying to tell you? RBI has increased the lending rates, that is repo rate, by 250 basis points, 2.5%. On an average, on the fresh loans given, the interest rates have been increased somewhere around, right, 1.4% to 1.5%. But the deposit rates means what is the rate of interest bank will give you when you deposit money. The deposit rates have increased by more than 2 percentage points. In fact, those who are keeping FD, I don't know how many of you are keeping FD. Please tell me, have the FD interest rates increased in the last 1.5 years? Let me see how many of you are actually doing, right, some observations, etc., etc. If you have not kept any FD, please ask your parents or your anybody relatives who have kept FD. In the last 1.5 year, FD interest rates have increased. FD interest rates have increased, right? They have increased. In fact, that's correct, because I also kept certain FDs. I know that FD interest rates have increased. The reason the Business Line newspaper says is that because of lower liquidity in the market. Because of lower liquidity, because if repo rate increases, can I say liquidity in the market will come down? Yes or no? Please do let me know. If repo rate increases, will the liquidity in the market come down or not? Of course, yes, it should come down. That is what RBI is trying to do with tight liquidity. Lower liquidity means tight. Liquidity availability is very low. With tight liquidity, now the banks are competing with each other. They are competing with each other to attract customers. And the best way to attract customers is by increasing interest rates on the deposits. Correct? That does it make sense to you? Right, so I hope you understand the logic behind it. So I'll give you the article, please read it, but again, don't enter into technicalities. There are certain terms such as weighted average, right, a lending rate on fresh loans, weighted average lending rates on right, old loans, etc., etc. All of that is not needed for UPSC. Just the concept is important. Why I'm discussing all of this? You'll not get this in the books. Suddenly UPSC can ask you a question. For example, what if UPSC will ask you, with tightening of liquidity in the banking sector, which of the following outcomes are possible? Think of it. Can UPSC trick into a question like this? Trick you into asking a question like this? With the tightening of liquidity in the banking sector, which of the following outcomes are possible? Not guaranteed, are possible. Right, and one of the options they will say deposit rates will start increasing. Many of you will basically say, right, no, that's not possible, etc., etc., but that is actually happening because tightening of liquidity means banks are fighting, competing with each other to get more deposits from customers, and that will lead to increased right, deposit rates. Right, so I hope you understand this. Okay, now let me go to the next chapter. Questions are there, we'll discuss that later. Please don't worry. Let me go to the next chapter now. Right, the chapter is another part of the fiscal policy, that is budgeting and finance commission. Budgeting and finance commission. Now, please tell me, finance commission, was it covered in polity? Let me know. Finance commission, was it covered in polity classes? Right, I've asked the faculty. The faculty has said yes. But again, I'll not talk about polity part of it. I'll not talk about constitution, etc., etc. I'll talk about economics part of finance commission. Right, what is the recommendation currently, how the funds would be distributed, how much a fund will go to which state. I will be more focused on that, please don't worry. Now, what I'll be discussing in this particular chapter, we'll start with budgeting. Okay, important concepts, process of budgeting, etc., etc. Then we'll discuss finance commission, right, what is the importance of finance commission, how the funds are distributed, right, etc. We'll discuss that, don't worry. Now, certain important points before I start the actual discussion of budgeting. Certain important points. Point number one, the term budget is not mentioned in the Constitution of India. Please remember this. Right, the term budget is not mentioned in the Constitution of India. What is mentioned in the Constitution of India? Article 112. Article 112 uses a term called as annual financial statement. AFS, annual financial statement. The term annual financial statement is mentioned, and under that Article 112 itself, the union government, I'll talk about union government here, the union government will basically introduce, right, and pass budget documents in the parliament. Point number one. Point number two. Point number two, whenever you talk about budget, until very recently, the union government used to present railway budget as well as a separate union budget. Railway budget and a separate union budget. But from 2016 and 2017, Government of India has discontinued that. Now there is only one budget. Railway budget has been taken and it has been kept under the union budget itself. All of you okay with this? Right? Until very recently, separate railway budget and union budget. Now, railway budget has been merged into union budget. Only union budget is presented. Point number three. Point number three. Whenever you talk about the concept of a budget, whenever you talk about concept of a budget, please remember what is announced in the budget. What is announced in the budget is government says for the next financial year, right? For the next financial year, how much expenditure will be incurred by the government. How much expenditure will be incurred by the government next financial year, by the way. Okay, how much expenditure will be incurred by the government, and how much how much income or revenue will be collected by the government. I'm using the term income or revenue, but the technical term, please remember that. The technical term that the government uses is how much receipts will be collected by the government. All of you okay with this? In the next one financial year, how much expenditure, how much receipts will be collected. And whenever the government talks about expenditure, all the expenditures are discussed in one document which is called as appropriation bill, which is referred to as appropriation bill. Government will introduce a document, a bill in the parliament, which is called as an appropriation bill. Appropriation bill will give you all the details of how much money will be withdrawn by the government from, please remember this, consolidated fund of India. Consolidated fund of India. Consolidated fund of India. CFI, consolidated fund of India. Now, why do we need to introduce a bill like this? The reason is that, as per the Constitution of India, if the government of India wants to withdraw even a single rupee from the consolidated fund, then it has to get the permission, approval of the parliament first. I'll repeat the statement. I'll repeat the statement. If the government of India wants to withdraw even a single rupee from the consolidated fund, it has to take the approval of the parliament first. So the government will introduce appropriation bill, and then introduce appropriation bill, get it passed, and then withdraw the funds from consolidated fund of India. Again, I know whether you are appearing in the morning sessions in the polity now, morning also polity is happening, or before I started economics, before that also polity sessions are over. Many of you are telling, sir, this article, that article. Very good, you remember that. Okay, now come back to the point here. The income, revenue, or the receipts, whatever receipts they are going to collect in the next financial year, the details of it is given in another document which is called as finance bill. It is given in another document which is called as a finance bill. Okay, now fourth point, are these the only documents which is submitted or introduced by the government in the budget? Absolutely no. During the budget, government will introduce a appropriation bill. Government will introduce a finance bill. Government will introduce a medium-term fiscal policy statement. Government will introduce a tax expenditure statement. Government will introduce a summary document. Government will introduce FRBM document, fiscal responsibility and budget management document, etc. Now we'll discuss what is FRBM, right? What is FRBM? What is the medium-term fiscal policy strategy statement? All of that we'll discuss later. Please do not panic now. Now these are certain important points regarding the concept of budget. Now in addition to this, let me introduce a couple of more concepts. One is called as a gender budgeting. One is referred to as gender budgeting. Second one is called as a zero-based budgeting. And the third one is called as outcome budgeting. One is a gender budgeting. Second one is a zero-based budgeting. Third one is outcome budgeting. Now, what is this gender budgeting, outcome, zero-based? Let's try and understand. First one, gender budgeting. What is the concept of gender budgeting which was introduced by the government starting 2005 and 2006? The concept is simple. Government of India annually, when they announce a budget, I repeat, Government of India annually when they announce a budget, the government will allocate certain funds in the budget. Government will allocate certain funds which will be used for empowerment of women. All of you okay with this? I'll repeat it again. What do you mean by gender budgeting? It is a policy approach which is followed by the government, wherein annually, whenever the government allocates funds in the budget, certain amount of funds will be reserved and utilized, spent for promotion of gender equality in India, right? For promotion of women empowerment in India. This concept is called as a gender budgeting. Technical definition, I've given it here. It is an exercise where funds are allocated, funds are utilized, the schemes are evaluated, etc. Right? This particular process of allocation, implementation, and evaluation of funds for promotion of gender empowerment, it is called as gender budgeting. It is referred to as a gender budgeting. Okay. Now, this particular policy of gender budgeting has been introduced by Government of India from 2005 and 2006. Now, what are the three important goals of gender budgeting? What is the Government of India trying to achieve using gender budgeting concept? Point number one, they want to ensure that the issues related to gender, such as let's say education of girl children, right, or let's say employment of women, skilling of women, etc. So there are a lot of gender issues, women related issues. The Government of India wants to bring these issues into discussion. They want to, right, start a discussion on these issues, and they want the whole nation to look at these particular issues, focus on these issues. So one is mainstreaming gender issues through government policies. Second very important goal of gender budgeting is it will increase the accountability of Government of India. Right, everybody, that is, let's say you and me, we can evaluate what current Government of India is doing in terms of promotion of gender budgeting. What is Government of India doing, or what has it done in the last 5 years? What did the earlier government do? We can start holding the governments accountable whether these right governments are implementing the policies to promote women empowerment in India or not. That is improving the accountability of the government. Third one is government straightforward wants to change their policies, make the policies much more gender sensitive. So these are certain very important objectives or the goals of following the policy of gender budgeting. The next point is, why should we have gender budgeting in India? What is the need to have gender budgeting? Is there any need for having gender budgeting? Right? Point number one. Point number one. All of you will agree when I say in India, whether you talk about education, whether you talk about access, I'm not talking about anything else, access in the sense whether more women are allowed to go to work or not, whether women at all are allowed to go to studies or not, or girl children are allowed to go to school or not, whether same access to food is given to them, that is boys and girls in a household, etc. All of you will agree when I say there is a mismatch, that is there is a differing access for both boys, girls, men and women whenever you talk about education, whenever you talk about healthcare, whenever you talk about right, let's say the let's say freedom that is given to go and work outside. In fact, again, right, do not make it political, nothing as such. Okay, just talk about economics. Yesterday's business line, I believe yesterday's business line, there was a very nice article about women empowerment in India. That is in editorial, very nice article. And I was struck, I was actually surprised by one statement that was given in editorial. What was the statement? The statement read like this, I might be paraphrasing, but don't worry, understand the intent behind it. The statement basically read, in India, there is no problem with the women working. There is only problem when they work outside. Let me know whether this statement makes sense to you or not. I'll repeat the statement by the way. In India, there is no problem with the women working, but it is a problem when they work outside. Right? So I hope you understand what they're trying to communicate there. Right? What they're trying to communicate. Okay, so whether you agree or disagree, your opinion is not important here. Why? It's a fact. It's a fact, because the article went on and said, in India, if women are not working outside, no doubt they will have lot of work within home. They will have lot of work within home. So problem is not that women are working. Problem is when they not work, right? When they are working outside the home. So I hope you understand the point. But anyways, come back to the point of discussion here. There is differing access. Differing access means girl children. Right? Girl children, rather than going to school, they're asked to work in the home. They're asked to take care of the cows. They're asked to take care of the sheep, etc., etc. Cook for the home, clean in the home, etc. Rather than going and working outside. In fact, if you're very careful, I would strongly recommend you to read about the work that has been done by the Economics Nobel laureate of this year. The work that has been done by Economics Nobel laureate this year. Lot of articles have come in the last couple of days, right? So I would recommend that try to read at least some of it, so that next year probability, I as far as I'm concerned, probability is very high, right? Either in a essay form or in a GS paper 3 on a social issue, probability is very high. Please be very careful. Okay, done. So differing access is one problem. Second one, the government, it's a duty of the government to ensure that more women will join the workforce. It is a duty of the government to ensure that women, right, will get access to, right, let's say safe transportation. Women will get access to wage opportunities. Girl children will get access to education, etc., etc. Right. So it is a duty of the government. It will promote better usage of the resources. If women will also start contributing to the economy, don't you think, right, the GDP growth rate in India, of course a contribution will start increasing and GDP will also start increasing. We can use the resources, labor resources, much more effectively now. And right, fourth one, it has been found that in many cases, right, it has been found that in many cases the gender budgeting increases women empowerment and reduces violence against them. Right, it has been shown that with more empowerment, when they have their own job, their own source of livelihood, etc., etc., it has led to reduction in the violence against women. Okay, so these are some of the reasons why there is a requirement of gender budgeting in India. Gender budgeting in India. Now, what has the government of India done? What has the government of India done? Just make an observation here. Do not by heart the graph. Just make an observation. Every year, when the government will spend money, every year, when the government will spend money in the budget, part of it, I said, they will reserve it for various schemes to promote women empowerment. How much of the money is the government reserving every year? On an average, the number will vary from one year to another year. Please don't by heart it. On an average, somewhere in the range of 4 to 5%. I repeat, on an average, somewhere in the range of 4 to 5% of the total expenditure, of the total expenditure is the amount that has been earmarked. It has been the reserved amount by the government in the gender budgeting. All of you okay with this? Sir, what do you mean by this? I'll just give you a very simple idea. Let's take 5%. Let's take 5% so that you understand. Imagine this year, imagine by the way, if government will spend 20 lakh crore rupees, if government will spend overall 20 lakh crore rupees, can I say 5% means government is reserving 1 lakh crore rupees under gender budgeting? All of you will agree with me. Simple CSAT concept by the way. If I say on an average it is 5%, it means if in this year, if government is spending 20 lakh crore rupees, government is keeping aside 1 lakh crore rupees under gender budgeting. That is the meaning. Okay. So overall, on an average, around 4 to 5% of the total expenditure has been reserved by the government under gender budgeting concept. But is it sufficient? Question is it sufficient? Answer is simply no. Why? Various surveys have shown, I'll take a census data. According to the census of 2011, the population of women in India is around 48%. Out of the total population, women account for 48% population. If you talk about income earned in India, 82% of the incomes are earned by male, whereas only 18% of the total incomes are earned by female. which means again the fact is very simple. Government needs to spend more money, not less. Government needs to spend more and more money out of the total budget expenditure in order to promote women empowerment in India, education for women, right, etc., etc. So that is basically the argument here. Please remember it. Now, when I say government will use this money for implementation of the schemes, what kind of schemes are covered? Please understand, multiple schemes are there, multiple schemes. I'll give you some examples, have patience. Generally, these schemes are divided into two parts. Part A, Part A scheme and Part B scheme. Part A scheme and Part B scheme. So what do you mean by Part A? What do you mean by Part B? I'll take a very simple example here. Remember, one or two examples more than sufficient. Part A schemes are those schemes where only women are the beneficiaries. I'll repeat the statement. Part A schemes are those schemes where only women are beneficiaries, which means any amount that has been allocated for this scheme will be utilized to provide benefits to women only. For example, widow pension scheme. Widow pension scheme. There are multiple schemes. Don't worry. Remember, one or two more than sufficient. Okay, widow pension scheme. So any amount that has been allocated for widow pension scheme, can you use it for any other? Can you use the amount for providing welfare to the male population? That's not possible because it's a widow pension scheme. So argument is simple. Part A schemes will cover schemes where 100% of the funds allocated, right, will be used for women. Whereas Part B schemes will cover those schemes where at least 30% of the funds allocated will be used for women beneficiaries. For example, Manrega. For example, Manrega, right? So this is how the classification has been done. Now, what you need to remember, look at the trend. Please look at the trend. Don't by heart the graph. Please look at the trend. Can I say most of the funds allocated for gender budgeting are utilized for Part B schemes? I'll repeat the statement. Most of the funds allocated under gender budgeting have been utilized for Part B schemes, right? Generally, around 20%, 30% of the funds have been allocated for Part A, but remaining has been allocated predominantly for Part B scheme, which means can you also recommend the same point if at all a question is asked in UPSC? Can you recommend the same point? That is, government of India, whenever they allocate the funds under gender budgeting, we should ensure that more and more funds, right, will be allocated for Part A, not for Part B. And the logical reason is that in Part A, only women are target in the sense they are the beneficiaries. So our focus is on only women. Whereas Part B, right, women are part of the beneficiaries. They are one of the beneficiaries. They are not the only beneficiaries. So focused schemes are expected to provide better returns generally. Right. So that is basically the argument, Part A as well as Part B. Okay. Right. So for current financial year, that is for 23 and 24, if you ask me, sir, how much money has been allocated by the government under gender budgeting? 2.23 lakh crore rupees. For the current financial year, right? For current financial year, 2.23 lakh crore rupees of funds have been allocated under gender budgeting by the government. Okay, can we go forward now? These are certain concepts related to gender budgeting. If you want to ask me, or if you'll ask me, sir, any recommendations you want to provide regarding this, these are the recommendations given by experts. First one, in fact, I've discussed the same thing because it was there in the newspaper. Government of India now has set up a committee. Please remember this. Government of India has set up a committee regarding this, right, to look at gender budgeting, give recommendations to restructure, right, reform the idea of a gender budgeting in India. Committee has been set up, a report has been submitted, yet to be discussed by the government. That is the precise reason, I believe, last month, right? I'm sorry, this month, October webinar, when I took it, I've discussed the concept of gender budgeting, what is the committee, right, etc., etc. But anyways, if you want to write recommendations way forward for this, first one I said, overall expenditure for gender budgeting has to be increased. No doubt regarding this. Overall expenditure under gender budgeting has to be increased. Second one, most of the expenditures allocated for part B, we have to allocate more funds for part A. Third one, third one, many of the ministries, departments within the ministries are yet to adopt gender budgeting. We should ensure that they will adopt gender budgeting when they implement various policies, various schemes by these ministries. Right? So these are some of the recommendations that you can remember. If at all a question is asked on gender budgeting, please write way forward. Okay, now let me go to the next concept, outcome budgeting. The next concept is outcome budgeting. Now, before I tell you what is an outcome budgeting, please observe the table. Do not by heart. Do not by heart this particular table. It's of no use for UPSC. Observe the table. What can you observe in the table? Right, in the second column. In the second column, they have mentioned name of the scheme. Third column, they have mentioned how much is the expected expenditure for the scheme. And the fourth column, they have mentioned, right? The fourth column, they have mentioned expected outcomes or deliveries, output or deliverables against the outlay. Correct? Can you observe all the four? Observe. Please don't by heart. Observe. I'll tell you what is the meaning. In case of outcome budgeting, this is called as an outcome budgeting document. In case of outcome budgeting, what is generally done is government will provide certain expenditure. Outlay means expenditure. How much funds have been allocated? Government will allocate expenditure. Now, what have you achieved using that particular money? You will have to give the details to Government of India. Is it okay? I'll repeat it again. Government will allocate certain funds to you. That is financial outlay. Now, how have you utilized this money? What utilization have you done with this money? As a result of this, what have you achieved using this money? You will have to provide the details under deliverables. For example, very simple example. Time is 6:30. Imagine you are the Ministry for Health and Family Welfare. Okay, you are the Minister for health in India. Now, if I allocate, let's say, not me personally, let's say government, if the government will allocate, let's say, 200 crore rupees to you. If government will allocate 200 crore rupees to you in a particular scheme, now can you provide the details regarding how you have utilized this 200 crore to construct hospitals in India? Yes or no? Please do let me know. Participate. It becomes easier once you understand it. Right? You have used the 200 crore rupee. Using 200 crore rupee, how many hospitals you have constructed? How many AIMS institutions you have constructed? Can I simply say here you're trying to connect input with output? Some of you are saying no. What is the problem, my dear? Some of you are saying no, sir, I cannot tell. What is the problem? I'll give a very simple example. By the way. Okay. I'm pretty sure most of you have experienced it, including me, by the way. In your childhood, or let's say when you're going to college or school, monthly, your parents, especially your father, will give you pocket money. Correct? Monthly, your father will give you pocket money. And at the end of the month, when you ask for the next month's pocket money, don't you think your parents will ask you, tell me, what did you do with the pocket money that I gave last month? Yes or no? I have experienced this, Baba. Very, very strictly, by the way. I have experienced this. Right? I'm pretty sure some of you, or at least most of you would have experienced. And some of you would have come from a privileged family where there is no concept of pocket money. Money is there whenever you want to use it. Or right, extremely other side, no concept of pocket money. You tell me what you want, I will only bring it. Correct? Right? One of the situations would have come across. No concept of pocket money. What you want, you tell me. I will only get it. I will not give you money only. right? So I hope you understand. I'm talking about one category. They have given you pocket money. At the end of the month, they will ask you, tell me where did you spend this pocket money? You'll simply say, sir, I spent it on books. I spent it on this. I spent it on chocolate. You will give a list to them. Then they'll say, okay, you have spent all the 100 rupee. Take next month's pocket money. So again, don't remember all these examples. No, UPSC is not going to ask you this. But can we apply the same logic to Government of India? You are a minister, government has allocated 100 crore for a scheme. Now Government of India will ask you, what have you done with that 100 crore rupee? What did you construct? Right? How many roads have you constructed? How many schools you have opened? How many new hospitals you have opened? Please give me the details. So can I simply say, in this case, we are connecting input with output? Correct or not? We are connecting input with output. We are creating a linkage between input and output. This concept is called as outcome budgeting. This is referred to as outcome budgeting. Why does government follow outcome budgeting? In fact, Government of India follows outcome budgeting. Remember this, India follows outcome budgeting. Why? Why do we follow outcome budgeting? Government says money is very precious to us. We have limited amount of money. I don't have huge amount of money to simply spend it like this. I have got limited amount of money. And whatever money I have, I want to ensure we will use the money in a very efficient manner. We will use the resources in a very, very efficient manner. How can we ensure that the efficiency will be there? Government will ask you to give outcome budget. Right? The government will ask every ministry to submit an outcome budget. So automatically accountability will increase on the ministries. Does it make sense? Accountability will increase. Ministers will be concerned, ministers in the sense officials, right? They'll be concerned about utilization of the resources. Efficiency will improve. And don't you think with outcome budgeting, government can also use the outcome budget document to showcase its achievements? Yes or no? Government can also use the outcome budget to showcase its achievement and tell the people, convey the message to the people, see, this is what we are doing. We have constructed so many, right, length of roads in India. We have constructed so many hospitals in India. Document is there. You can check it. Right. So these are some of the reasons why generally government prefers to have outcome budgets. So budget expenditures are presented in terms of functions, programs, performance, which will reflect government's output with input. In case of this, we are trying to establish a relation between how much money we are spending and with that, how much output we are getting. And that is basically the outcome budget. Budgets are developed based on the relationship between funding as well as expected results. It will enhance the visibility how the government policies are translating or yielding results at the ground level. And in this budget, allocations are always measured in terms of outcomes. Right? So these are certain very important points regarding the concept of outcome budgeting. Regarding the concept of outcome budgeting. Now let me go to the third concept, zero budgeting. Zero based budgeting. Now, tell me how many of you have experienced this? How many of you have experienced this? Okay. You'll go to your parents. You'll go to your parents and ask for money. Listen to me very carefully. Listen to me very carefully. Do not be confused between outcome and zero based. I'm talking about zero based now. Okay. You will go to your parents today and you will ask for money. Let's say you will ask for 1,500 rupees. Hypothetically, right? Don't say, sir, what will I get in 1,500, etc. Let's say 1,500. Immediately your father will ask you, tell me, why do you need 1,500? Usually mothers don't ask. Mothers will basically say, you, why 1,500? Take 2,000 rupee. You might require it. But your father, very strict. Father will say, why? Why 1,500? Tell me. Then you will say, I want to purchase economy book. I want to purchase economy book. You will tell your father, I want to purchase economy. Now, your father will say, okay, economy book. How much? How much for it? He'll say 600 rupees. Then your father will say, okay, out of 1500, 600. What about remaining 900? What about remaining 900? Then you'll say, I also need polity book. I also need polity book. Right? Then your father will say, okay, polity, another 600. 600 plus 600, 1200. What about remaining 300? You will say, I want to purchase Yojana magazine as well as Kurukshetra magazine. Again, please understand, don't say, sir, it doesn't happen in my home, etc. Just to make you understand, I'm talking about all of this. It's basically say Yojana plus Kurukshetra magazine, another 300. Now your father will say, okay, 600 plus 600, 12, 12 plus 3, 15. Very good. So take 1500 rupees. Now please tell me what is the practice followed here? Don't worry about example. What is the practice followed here? Can I say whatever funds have been allocated, the starting point for allocation is a 0 rupee, and we'll start building the allocation after 0 rupees. I'll repeat it again. Whatever the allocation is done here, what is the starting point? Starting point is 0. Your father will say 0 plus 600 for economy, plus 600 for polity, plus 300 for Yojana magazine. The starting point is 0 rupee. Right? Point number 1. And point number 2, please tell me, this 1500 rupee which has been allocated to you, don't you think it is independent of the money that is given to you in the last month? All of you okay with this? It is independent of the money which was allocated to you last month. Right? So argument is simple here. Please understand. There are two methods. One is called as incremental budgeting. And the second one is called as zero-based budgeting. One is called as incremental budgeting and the second one is called as zero-based budgeting. Right? What is this incremental budgeting? Imagine Government of India. Assume you are the minister again. Congrats. 642, assume you are the minister. Okay. So in the last year budget, 100 crore rupee was allocated to you last financial year. And this year, they will simply increase this by 20% to 120 crore rupee. All of you okay with this example? Let me know. I'll repeat it again. Last year, 100 crore rupee was allocated to you. This year, they will simply increase the allocation by 20% to 120 crore rupee. Now, in this case, in this example, can I say whatever funds were allocated to you this year, that decision was taken based on the funds allocated last year? I'll repeat it. How much money was allocated to you this year? The decision was taken based on funds allocated last year. So last year's allocation became a base for you, and that base was increased, and this year allocation was decided. Come to zero-based budgeting. Right, 100 crore rupee last year. They'll say ignore it. Of no use whatsoever. Ignore last year. This year will start with 0 rupees. Although I'm writing crore, 0 crore has no value, by the way. This year will start allocation of the funds with 0 crore rupees. Now you tell me how much money you require for construction of hospitals. You will say for construction of hospitals, I will require 300 crore rupees. Good. How much money you require for providing vaccination to the poor people? You will say, I will require another 200 crore rupees. Good. How much money will you require for launching one more scheme where you will provide health insurance to poor people? You will say, I will require another 100 crore rupees. Now government will say, okay, I will allocate 600 crore rupees to you. So can you understand the difference between zero based as well as incremental budgeting? In incremental budgeting, last year's allocation is taken as a base. In zero based budgeting, funds are allocated starting with zero. Starting point is 0 rupee. Then keep on allocating based on the requirement. Now tell me, which one do you think is more efficient methodology? Which one do you think is more efficient methodology for allocation of the funds? Incremental or zero based? You should say zero based. Understand my point? You should say zero based. Right? Why? In incremental budgeting, right, don't you think you are not worried about whether the ministry requires 120 crores or not? You're not worried. You'll simply say increase by 10%, increase by 20%, increase by 30%. That is incremental. But in case of zero based, you are allocating based on requirements. I repeat, in zero based, you are allocating based on requirements. In incremental, you are not worried about it. Whether the ministry requires 120 crores or not, you're not worried. You're simply increasing it by 20%. But in case of zero based, right, you will allocate the funds as per the requirement. And point number two, if the money that is available with the government is very limited, which is generally the case, don't you think zero based budgeting is much better compared to incremental? I'll repeat it. If the money that is available, with the government is very limited, which is generally the case, don't you think zero based is much better compared to incremental? And third very important point, in case of zero based, if there are multiple expenditures required, can you tell the ministry, I will allocate, right, for 3 schemes because this is a priority. I will not allocate funds for remaining schemes because that is not a priority for me right now. Yes or no? I'll repeat it again. Under zero based, as the government, can you tell the ministry, out of these 3 schemes, third one is not a priority for me, so I will not allocate funds for the third scheme. But for remaining 2 schemes, which is a priority, I will allocate funds. Can you do the same in case of incremental? Incremental, we don't have to do that because we are taking the last year's funds as a base. We'll simply increase or change it. Right? So these are the very important differences between incremental budgeting as well as zero-based budgeting. Okay. Now, zero-based budgeting. In case of zero-based budgeting, every program is started at a zero base and every allocation has to be justified. Under this, each year's allocation is done independent of the funds allocated in the previous year. Whatever funds were allocated last year, it has no importance this year. You will have to justify why you need so many rupees for this year. Only then the funds would be allocated. Okay, it covers both existing schemes as well as the new schemes, and it will provide a mechanism using which government can use the resources very efficiently, hold the ministries accountable, right, and prioritize for which schemes of funds should be allocated and for which funds the schemes should not be allocated. Okay, so these are certain very important points regarding concept of zero based budgeting. What are the objectives? One, what is the priority? What is the priority for you? Allocate funds for it first. Which scheme is a priority? Which is not a priority? Funds can be allocated based on it. Allocations are justified because you're starting at 0 rupees. Allocations are justified. Third one, resources cannot be wasted here. Right? Wastage of resources will not be done, unlike incremental budgeting. The task or activities always will be under constant review by the government, because the funds have been allocated. Government will keep on reviewing how you are utilizing the funds for these schemes. Okay, in case of India, are we using zero based budgeting? In the past, yes, state governments have used zero based, even the central government has used zero based. Okay, done. Right, so these are certain important concepts related to budget. Any issue, Any concern? Because we'll take a break now. Any issue, any concern, any doubt, please do let me know. Incrementally same as just a second. Incrementally same as outcome. My dear, please understand. Some of you get confused between zero based, incremental, and right the outcome budgeting. In outcome budgeting, what is government of India trying to find out? What is the output they are trying to find out? Can you understand? What is the output? Okay, what is the output you're trying to have? Right, that is measured in outcome budgeting. Whereas in case of incremental or zero based budgeting, output is not a concern, output is not a focus. For what purpose you need, for what scheme you need, what you want to achieve is not there. For what scheme you require, you tell me that. Right? That is basically the concept of zero based budgeting. Okay. Central government presently uses which one? Central government mainly uses basically the outcome budgeting. It uses gender budgeting. And the zero based budgeting here and there, government of India as well as state governments have used it. Narsimham committee recommend some of them have not been implemented by the government for a very simple reason. Government owns majority of the public sector banks. Government doesn't want to give away lot of powers to the banks. Even today, please understand, government by virtue of being a owner, government by virtue of being a owner will always try to have certain influence on the functioning of public sector banks, whether they want it or they whether they like it or they don't like it doesn't matter, because the government is the owner. They will try to have influence over the functioning of public sector banks. Okay, any other question? Gender budget means in the budget certain funds would be allocated where these funds will be utilized for providing welfare to women. For providing welfare to women, that is, the funds would be allocated in the form of schemes, where the schemes will cover right only women, or where the schemes will reserve 30% of the expenditure to provide a benefit to women. Part A and Part B schemes. Okay. What is difference between gender zero budget and incremental budget? In incremental budget, what was allocated last year will be considered to allocate funds this year. In zero based budget, what was allocated last year is ignored. This year, how much money you want, you will have to justify all the requirement. Okay. Okay, done. So let me take a break now. Let me take a break. Time is 6:53. We'll restart the discussion at 7:08. We'll restart the discussion at 7:08. Please join back at 7:08. Okay, am I audible? Can we start? Good evening, everyone. Okay, let's start. So, next, how the budget is prepared, how the budget is passed, how it is prepared, and how it is passed. Let's go point by point. How the budget is prepared. This is a process. Point number one, please remember, it is the Ministry of Finance. It is the Ministry of Finance which will prepare the budget. But within Ministry of Finance, which is a department, the department that is involved in the preparation of the budget is the Department of Economic Affairs. Department of Economic Affairs, DEA, Department of Economic Affairs, which will prepare the budget in India. And specifically within Department of Economic Affairs, it is a budget division. Within the department, there is one division called as a budget division. So budget division of Department of Economic Affairs of a Finance Ministry is responsible for preparation of the budget in India. But how do they prepare the budget? How do they find out at how much money to allocate, how much will be the total expenditure, etc.? Initially, generally around 5 to 6 months before the presentation of the budget. I repeat, 5 to 6 months before the presentation of the budget, the Ministry of Finance will send a circular document to all the ministries, all the departments, asking them how much money they would require, for what purpose they would require, right? What are they spending money on, etc. All these ministries or departments will submit the documents to Ministry of Finance. Now, Ministry of Finance will hold consultations with all of these departments, and they will finalize. They will finalize how much money will be given to Ministry of Finance, how much money will be how much money will be given to Ministry of External Affairs, how much money for Defense Ministry, how much for rural development, etc., etc., etc. And after finalization, after the documents are finalized, the budget documents are printed. But nowadays, we are not printing budget documents. Everything is published online. I hope you know this, right? For current financial year, if you have observed the budget, okay. If not, next year, you're writing exams next year, just observe the budget for next year. Or if you're writing exams in 2025, observe the budget of that particular year. What you will see is a general practice where Ministry of Finance, rather than printing the documents, they will prepare digital documents now, right? Everything will be digital document. For example, how do I prove it? If you see the budget speech of Finance Minister, if you see the budget speeches of Finance Minister, if you see the budget speech of, let's say, 2009, 2018, 2017, 2015, etc., you will see the Finance Minister holding a set of document papers. Finance Minister will have a set of papers, right? Finance Minister will keep on, right, shifting from one page to the next page, right? Go to the next page, read out, next page, read out, etc. But if you're seeing the recent budgets presented, for example, this year's budget presented by the Finance Minister, you will see that there are no papers. In fact, there is a tablet. There is basically a tablet in front of the Finance Minister. Finance Minister will keep on scrolling down and read the document. Have you seen it? If not, check in YouTube, you will get it. What is the meaning here? Government of India now says we will not have physical documents, will not have physical papers in the form of budget documents. We have done away with the printing of all of it. We will simply create a digital copies now. Budget, right? Paperless budget has been introduced. It was started during pandemic. We have continued with the same concept. Okay. So this is the process of preparation of the budget. Everybody's okay. It's a very simple process. The Department of Economic Affairs will send the documents to all the ministries. Once they receive the proposals from all the ministries, they will hold consultations or discussions, and they will finalize what will be the money allocated for which department, which ministry, etc. Now, once this is done, the budget is presented on the first working day of February. Please remember this. The budget is presented on the first working day of February. Right, I'm very specific here. First working day of February, because Many of you basically ask me, sir, what if first is a holiday? What if first is a Sunday, etc.? Underline the term working day. The first working day of February. Right? Earlier, couple of years ago, it was presented on the last working day. Now we have a preponed it. We are presenting it on the first working day of February. The logic that has been given by the government is understand the logic behind this. All of you know that the financial year will start from 1st of April, correct? The financial year will start from 1st of April. Now, earlier what used to happen was the budget was presented on the last working day of February, last working day of February. And please understand next point here. Once the government will present the budget, it doesn't mean government will be allowed to withdraw the money. No, there is a particular process. We'll discuss the process now. Don't worry. There is a particular process that you're supposed to follow because it is a bill. All of you remember appropriation bill? It is an appropriation bill. So bill has to be discussed. Bill has to be passed in both the houses. Then it has to go to president. President has to give the signature. Then the government of India is allowed to withdraw the money. But by the time you follow all the process, by the time you finish all of it and get the signature of the President of India, you will be in the month of, let's say, May. You would enter into the month of May, which means you are already in the next financial year. Right? Don't you think that's a problem? Let me know. Don't you think that's a problem? Because if you talk about geography, the monsoon will start from which month in India? Let me know. For whom geography is over. If geography is not over, don't worry. It will be covered. The monsoon is supposed to start in the month of June. Beginning of the month, beginning of the June, only first week of June. Some of you are saying July, some of you are saying August. My dear, June. Right? June is the right answer. Beginning of the June only. June to September, right? Onward monsoon, then retrieval of the monsoon. Baba, be very careful with monsoons. Right? So argument is simple. You will get the permission of President of India to withdraw the money in the month of May. And immediately in the month of June, monsoon will arrive. So what if you want to allocate funds for certain irrigation projects? What if you want to allocate funds for certain other projects allocated related to agriculture only? So don't you think there's a delay in the implementation of all of it? So government, in order to address all of these issues, what it has done is, rather than presenting it on the last working day of February, now we will present it on the first working day. So that by the time we reach 1st of April, by the time we enter into the next financial year, budget will be passed, the bills will be passed, you will get the president's assent or the signature, you will be allowed to withdraw the funds from the Consolidated Fund of India. Does it make sense now why Government of India has shifted from last working day to the first working day of February? So on the first working day of February, the budget is presented. Point number one, first working day, budget is presented. Okay. Next, what will happen? Once the budget documents are presented, what will happen? Once the budget documents are presented on the floor of Lok Sabha, for the next couple of days, general discussions are conducted. For the next couple of days, general discussions. Now, what do you mean by general discussions? Representative of all the political parties, opposition parties, now they'll be given certain time in Lok Sabha to view their opinions, to provide their opinions about the budget. Right? Whether the opposition party believes this is a good budget for companies, is it a good budget for agriculture sector, is it going to bring back all the black money into India, is it going to provide right welfare to the people, etc., etc. So to voice their opinions, to provide their viewpoints about the budget, for the next couple of days, a general discussion is conducted. General discussion. And one more very important point regarding general discussion is there is a technical term called as demand of grant. There is a technical term called as demand of grant. Please observe here. There is a term called as a demand of grant. What do you mean by demand of grant? Let's take a very simple example here. Imagine there is one ministry. Okay, imagine there is one ministry. Total money allocated to the ministry, let's say, is 1000 crore rupees. Total money, total funds allocated to the ministry is 1000 crores. Now, don't you think this 1000 crores would be broken down into component 1, 2, 3, etc. like this? Yes or no? Please participate. Right? 1000 crores have been allocated to your ministry. Don't you think this 1000 crore is the total money? But this 1000 crore will be allocated for scheme A, will be allocated for scheme B, plus, right, let's say repairs of certain hospitals, plus, right, let's say introduction of new scheme. Like this, the sum total is 1000. But there are different components, right, for which the funds have been allocated. Totally is 1000. These are called as a demand of grant. These are referred to as a demand of grants. All of you are okay with this? These are referred to as a demand of grants. Whenever you talk about general discussion, individual allocations are not discussed. I'll repeat the statement. In general discussion, how much funds have been allocated individually for these schemes, that scheme, etc., etc., that is generally not discussed. Why? That is discussed later. That is discussed in a later stage. So, couple of days, general discussion is conducted, and after the general discussion is over, standing committees are formed, and the demands of grants are allocated to standing committees. There is a standing committee for right, let's say heavy industries. There is standing committee for agriculture. There is standing committee for right, let's say other civil aviation market in India, etc., etc. Standing committees are there. You will come across concept of standing committees in polity, right? How many members are there from Lok Sabha, how many members are there from Rajya Sabha, etc., etc. You will come across a concept of standing committees in polity. Don't worry. So there are standing committees. To respective standing committees, the demands of grants of that respective ministry is allocated or department is allocated. Now the standing committees will look at the funds allocated. They will study the allocation of the funds and they will submit the report back to Lok Sabha. They will submit the report back to Lok Sabha. Now, at this particular stage, there is a detailed discussion of every demand of grant in Lok Sabha. At this stage, there is a detailed discussion of every demand of a grant in Lok Sabha. So, every demand of a grant is taken up, discussion is conducted, voting will take place. If there are any motions associated with this demand of grant, that will also be introduced, etc., etc. Now, what is this motion? What is the importance of the motion, etc., etc.? You will come across that in polity. Have patience regarding that. Done. So, once the discussion is done, once the detailed discussion is done, and demand of grant is approved in the Lok Sabha, you will take all these right demands of grants, you'll put it together. This is called as a appropriation bill. Appropriation bill, expenditure, appropriation bill. And once the appropriation bill is passed in Lok Sabha, it will be sent to the Rajya Sabha. Again, there's a discussion, right? Once they approve it in Rajya Sabha, will be sent to the President of India. Once the President of India will give the assent, signature, approval to the appropriation bill, now the Government of India will be allowed to withdraw the funds from Consolidated Fund of India. And once the Lok Sabha will pass, appropriation bill, now Lok Sabha will take up finance bill, where the taxation proposals are there, where disinvestment proposals are there, etc., etc. That is basically how the process is followed, right, in the Parliament to introduce appropriation bill, finance bill, discussion, passage, assent of the President of India. Done. This is the passage of the budget. More of a polity discussion, but don't worry. What is important from economics point of view? Let's start. Let's start. Right. This is purely economics now. Purely economics. Let's start the discussion. Whenever you talk about the budget, Whenever you talk about the budget accounts are divided into two parts. Listen carefully. Last year, a question was asked on this only. 10 marker question. One of the most easiest questions. Last year, the question has been asked. But even today, concepts are very important. Again, can be asked in prelims. Whenever you talk about budget is divided into two accounts. The budget account is divided into two types or two parts. One is called as the revenue account and the second one is called as capital account. One is called as revenue account, second one is called as a capital. Let me check whether I've given this or not. No, it is not there. Okay, I'll write it, don't worry. One is called as a revenue account, second one is called as a capital account. Now, how do you differentiate between what is a revenue account, what is a capital account? Simple, listen to me carefully. Whenever you talk about capital account, it either talks about expenditure incurred or income collected. Capital account talks about expenditure incurred or income collected, but whenever they will talk about expenditure and income under capital account, it will be associated with changes in assets and liabilities. I will give you examples. Listen carefully first. It will be associated with changes. That is, change means increase or decrease in assets or liabilities. All of you okay with capital account? I'll repeat it again. In capital account, what you will talk? You will talk about expenditure incurred, income generated, right? Instead of income, they will use the term receipt. Receipts earned. But whether you're talking about expenditure or income, it is always associated with changes. Changes means increase or decrease in assets or liabilities of the government. For example, think of it and do let me know. Can I say government of India will borrow by issuing government bonds in the market? I'll repeat the statement. Government of India will issue government bonds in the market and borrow from the market. Can I say it is basically part of capital account? Anybody has a problem? Can I say it is a part of capital account? I'll give you one more example, by the way. I'll give you one more example. Government will sell Air India. It has already sold. Government will sell Air India and collect money from the buyer in the market. Now tell me, if Government of India will sell Air India, can I say it is earning income? It is getting receipts. But on the other side, by selling Air India, can I say assets of Government of India have come down? Yes or no? Does it make sense to you? I'll give you one more example. Government of India, Government of India will spend lot of money and construct, let's say, airport, construct, right, let's say, national highways, construct, right, any other infrastructure. Now, simple, it is expenditure incurred by the government, and as a result of expenditure, can I say assets of Government of India are increasing? Can I say it is part of the capital account? Can I say it is part of capital account? Right? If you construct a port, airport, roads, all these are assets, by the way, capital assets, right? Part of capital. Now come to the other side. Revenue side. Right? The revenue side also talks about expenditure and income. It also talks about expenditure and receipts. Right? Both are there. Expenditure as well as receipts, both are there. But because of these expenditures or receipts, no change in assets and liabilities will be observed. No change in assets or liabilities will be observed. No change. Please remember this. I'll give you examples. There is no change in assets or liabilities of Government of India. How, sir? Let me ask you a very simple question. Government of India will collect income tax from you. Tell me, Government of India will collect income tax from you. Is it a liability for Government of India? Let me know. Government of India will collect income tax from you. Is it a liability for Government of India? It's not a liability. It's a receipt. It's a income. But it is not creating any liability for Government of India. All of you will agree with me? What about GST? What about GST? Right? Some of you are saying asset. My dear, it is an income. It is an income. It is a source of receipts for the government. It is not an asset. It is a source of receipt, income for the government. All of you will agree? I'll give you one more example. I'll give you one more example. Government, government will provide a lot of subsidies for poor people. Right? Government will provide a lot of subsidies for the poor people. Can I say it is an expenditure? Correct. It is an expenditure. But tell me, is it creating assets? Let me know. By providing subsidies, let's say LPG subsidy, right? Many of your households might be getting, my household is also getting now. Very recently, Government of India has reduced LPG subsidy. Is it creating assets? Is it creating liabilities? Of course, no. So at least now all of you are okay? All of you okay? So whenever you talk about revenue or capital, it's very simple. Revenue or capital, it will cover expenditure and receipt. But the difference is that in case of revenue, there is no change in the assets or liabilities of the government. Whereas in case of capital, there is always a change in either the asset or liabilities of the government. Please remember this. Once you understand this, it's a very simple concept. And many of you will be confused with the term revenue here. Understand my point here. Many of you will be confused with the term revenue because for a common man, revenue means income. Do not confuse with that. All of you okay with this? For a common man, revenue means income, but here revenue is not income. Revenue is a type of account in the budget document. Revenue is a type of account in the budget document. Okay, do not be confused with the term revenue with the common meaning of the term revenue. Because for you, for me, day to day, every day, revenue means income. But government says revenue account is not income. Revenue account will talk about expenditure incurred as well as receipts earned, wherein there is no change in the assets or liabilities of the government. Okay, now come back to this. I'll talk about receipts first. I'll talk about receipts first because I'll write it here. Revenue account can be divided into revenue receipts and revenue expenditure. Further division. Revenue account can be further divided into revenue receipts and revenue expenditure. Capital account can also be divided into capital receipts and capital expenditure. So now let's talk only about receipts. Let's talk only about receipts. That is one, revenue receipts as well as capital receipts. What is the importance? You'll understand in some time. Have patience. What do you mean by revenue receipts? These are representing incomes which are received. Received means earned by the government from all the sources in its day-to-day activities. By providing day-to-day governmental activities, in the course of that, whatever is the income collected by the government, it is called as revenue receipt. And have a look at this. Revenue receipts do not create a liability or do not reduce assets of government of India. Remember this point. This is very important. Revenue receipts are not creating any liability for the government, nor are they reducing the assets of the government. Come to the capital receipts. Capital receipts, right, are those incomes which are collected by the government in the course of which either there is a change in the asset or there is a change in the liability. That is, the capital receipts will be changing whenever there is a reduction in the assets held by the government or there is increased liabilities of the government. Those are called as capital receipts. Let me give you examples of each of them, right? Understand this. Let me give you examples of each of them. Revenue receipts. Can I say on day-to-day basis? On day-to-day basis, government will collect tax resources from us. Day-to-day activity. Let me know. On day-to-day basis, can I say government of India will collect a lot of taxes from us? What about passport fees? Think of it. What about fees that you pay for passport? What about fees that you pay for driving license? So I hope you understand. So by providing the services, right, various government services on day-to-day basis, government will keep on collecting lot of income. That is called as a revenue receipt. Revenue receipts are further broken down into two components. One is tax receipts. Second one is non-tax receipts. All of you remember tax receipts? That is in the form of a direct taxes as well as indirect taxes. For example, income tax, goods and services tax, customs duties, right, etc., etc. So direct taxes as well as indirect taxes, these are the tax sources, right, the tax sources through which government will collect money. On the other side, what are the non-tax sources through which government will collect the money? Let's go point by point. First one is called as dividend. Now, what do you mean by dividend? Let me explain it. Please listen to me carefully. Listen to me carefully. Here is a company. Okay. Let's say there is a company. And this company has issued shares. The company has issued shares. Now, whoever is the purchasing party or whoever will purchase the shares, can I say they will have ownership in the company? Right? Please do let me know. Right? We have discussed the concept of shares also earlier, yesterday, in fact. A company has issued shares. Any investor who will purchase the shares becomes a part owner in the company, has certain ownership of the company. Now, whenever the shareholders are there, these are nothing but owners. Shareholders are nothing but owners. Point number one. Point number two, the company will make profit. Let's say company will make profit. Second question to you. The profits of the company should belong to whom? Let me know. The profits of the company should go to whom? Should belong to whom? Can I say owners of the company? Correct? Owners of the company. And who is the owner of the company here? Shareholders are the owners. So whenever the company will earn profit, I repeat, whenever the company will earn profit, part of the profit is given to every shareholder. This is called as dividend. Any problem? Can we go forward here? I'll repeat it again. A company, whenever it makes profit, because you are the owner of the company, you will get the profit of the company if the company makes profit. Because many of the students will ask me, sir, what if the company incurs loss? If the company has incurred a loss, right, do you think you will get dividends? Because the dividends have to come from profits. If there are no profits, no dividends. Argument is very simple. So the part of the profit will be taken and distributed amongst the shareholders. This is called as dividend. Now, can I say government of India owns a large number of companies in India? Yes or no? Government of India owns a large number of companies. Right? Public sector banks are there. Reserve Bank of India is there. Right? Many companies are also owned by government of India. So don't you think government of India will receive part of the profits earned by all of them, which is called as dividend? But please understand this very carefully. If you are the shareholder, company will give you dividend. Will it reduce assets? Think of it. Will it reduce or change anything in the assets? Absolutely no. Nothing is changing in assets. Or is it creating liability for you? No, there is no creation of liability also. So you are the owner, you will get part of the profit. There is a question of change in the asset or liability for you. Nothing is changing, it is just an income for you. It is just an earning for you. Okay? So dividends. right? Dividends earned by government of India are part of revenue receipts. Second one, interest receipt. Interest receipt means, understand this very carefully. I'll give you two examples here. Understand them. Here is government of India. Government of India will take loan. Government of India will take loan and pay interest. This is example one. Government of India will take loan and pay interest. Example 1. Example 2. Government of India will give loan. Will give loan and earn interest. Earn interest. This is example 2. Now remember the technical terms. In example 1, this is called as interest payment. This is referred as interest payment, and in example 2, this is called as interest receipt. All of you okay with this? In example 1, this is called as an interest payment. In example 2, this is called as an interest receipt. Okay, now please be very careful. Interest payment as well as interest receipts are counted as a part of revenue accounts. They are counted as a part of revenue accounts, because please understand, if you have taken a loan of 200 crore, once you repay 200 crore, your liability will cease. All of you okay with this? I'll repeat it again. If government of India has taken a loan of 200 crore, if it repays 200 crore rupees, that loan amount will close, right? The liability will close. Interest is paid semi-annually by the government. Interest is paid by the government semi-annually. For example, sir, what do you mean by that? Many of you ask me, what do you mean by that? Let's say, this is a bond. All of you remember your friend? This is a bond issued by the government. How much is the coupon rate? How much is the interest rate? How much is the interest rate? 6%. Government will give you 6% out of 6% of 100 rupees. 6 rupees will be given by the government to you. But please remember this, government will pay it, right, in 2 installments. Government will not give you one shot 6 rupees like this, right? After 6 months, they will give you 3. After 6 months, they will give you another 3. Right? This is semi-annual payment. All of you able to understand? Semi-annual payment. Right? That is what is practiced by the government. So whatever government will pay in the form of interest or collect in the form of interest, both are part of revenue. It is not part of capital. It is not part of the capital. Why? Whenever government will borrow, it will pay lump sum amount like this. Whatever is the liability, 200 crore rupee, they will pay full 200 crore. If they are given a loan, and by the way, many of you are asking, will the government ever give a loan? Of course, yes. Central government provides a lot of loans. For example, central government provides loans to state governments. Is it okay? Right, don't be under any confusion. Does center provide any loan? Yes, center provides loans to the state governments as well. Right, so argument is, if they give loan, they will earn interest. It is called as interest receipt. If they take loan, they'll pay interest. It is called as an interest payment. But either payment or, right, the receipt of interest, it is always part of revenue. Please remember that. Let me go forward. Interest receipt, fees and fines, as well as external grants. Now many of you will ask me, what do you mean by grant here? Please understand, grants are payments or transfers. Grants are nothing but payments or transfers. Grant is not a loan. I repeat, grant is not a loan. Please do not be under any confusion. Grant is not a loan. For example, if I give you a loan of 100 rupee, it is self-explanatory that you will have to repay it back. All of you agree with me? If I give you a loan of 100 rupee, you will have to return it back to me. Loan. But if I give you a grant of 100 rupee, you will not pay any interest on it. You will not repay the 100 rupee. All of you are okay with the term grant? Right, sir, where does Government of India get the grants? Many international agencies keep on providing grants to multiple countries. Many international agencies such as World Bank, United Nations, they'll keep on providing grants to member countries like this. Right, so because there is no liability, it's not a liability, right? Hence we'll keep it under the concept of external grants. I'm sorry, we'll keep it under the concept of revenue receipts. So this is revenue receipt. Come to the other side, capital receipt. Come to the other side, capital receipt. Capital receipt, first one, the center has given a loan, let's say of 200 crore rupees. It will recollect 200 crore rupees today. Tell me now, is it okay? I'll repeat it again. Imagine 2010. Imagine the year 2010, central government had given a loan of 200 crore rupees to a state government, and that 200 crore rupee will be collected by the government, recollected by the government this year, that is in the financial year 24. Can I say government of India's right money collection, that is the amount recovered, will be part of capital receipts? Point number one. What about disinvestment? Government will sell Air India. Disinvestment means what? Selling of assets. I'll repeat. Disinvestment means a selling of assets. You will sell the assets. Right? So when you sell the asset, you will get the money, you will get the income. Right? So disinvestment, you are selling asset, your assets are going down, automatically capital receipt. What about borrowings done by the government? Government will borrow from World Bank. Government will borrow from local market, domestic market, etc. So when government will borrow, its liabilities will increase, automatically capital receipts. Right, so this is how generally the capital receipts as well as revenue receipts are classified. This is a very simple structure, by the way. Right, lot many components are there. I've simplified it for your benefit. Now let me go forward. Please listen to me very carefully. Can I say revenue receipts? I'll start number A. I'll call revenue receipts as 1, recovery of loans as 2, disinvestment as 3, and borrowings as 4. Listen to me carefully now. Right, revenue receipts as 1, recovery of loans as 2, disinvestment as 3, and borrowings as 4. Now, please observe 1, 2, 3, and 4. And please tell me in which of the four categories there is a repayment done by the government in the future. I'll repeat the statement. There are four numbers: 1, 2, 3, and 4. In which of the four categories do you think government will have to repay in the future? Can I say fourth one? All of you okay with this? Fourth one, Are Baba, Government of India will pay. Some of us saying recovery of loans. Recovery of loans is government collecting the money. Yes or no? Recovery of loans is government collecting the money. Government is not paying, government is collecting money. Whereas the fourth one, imagine you're the government of India. Imagine you're the government of India. Today you will borrow 100 crores. Don't you think after 5 years or after 10 years or after 40 years, you'll have to repay that 100 crore rupee? All of you okay with this? We'll have to repay that 100 crore rupee. So fourth component is the one where today it is a today it is a receipt for you. Today it is a receipt for you, but it has created a debt for you. All of you will agree with my statement? Today it is a receipt, no doubt. It is a receipt for you today. But can I say this receipt has created a debt for you? Can I write it like this now? This is important. Can I write it like this? I'll write it as 1, 2, and 3 are non-debt creating receipts. 1, 2, and 3 are non-debt creating receipts. Whereas fourth one is a debt creating receipt. 1, 2, and 3 are non-debt creating receipts, whereas the fourth one is a debt creating receipt. Can we go forward now? Anybody has a problem? This is important. This is important. Right? Arey Baba. What is a receipt? Income, my dear. Income. I've written it earlier also. Right? Please focus on the discussion. If you do not focus on the discussion, all of it will become very difficult for you. Did we not discuss what you mean by receipt earlier here? It is there right in front of you. Okay? Right? So I hope you understand this. Please listen carefully. Listen carefully. All these are important concepts. So 1, 2, and 3 are non-debt creating. Non-debt means what? You will collect the income and you do not have to repay or pay the amount back. Correct? You will collect it today and you do not have to repay it back in the future. Whereas the fourth one, you will collect it today, you will have to repay it in the future. That is debt creating receipt. Further, can I say one is basically non-debt creating revenue receipt, non-debt creating revenue receipt, and 2 and 3 2 and 3 are non-debt creating capital receipt. Non-debt creating capital receipts. Why I'm using all these technical terms? Suddenly UPSC can ask you. For example, right? Let me give you a very hypothetical question, imaginary question. Government of India will sell a public sector company XYZ. I'll repeat the statement. Sell a company XYZ. With the selling of the government owned company XYZ, which of the following accounts would be affected? Right? Which of the following accounts will be affected? Revenue receipts, revenue expenditure, capital receipts, capital expenditure, or if they want to make it much more difficult, debt creating revenue receipts, non-debt creating revenue receipts, right? Debt creating capital receipts, non-debt creating capital receipts, etc. So I hope you understand. UPSC can keep on twisting the terms, keep on twisting the statements, and technically they can make it much more difficult. Correct? Right? So these are certain important concepts. Please remember them. Please remember them. Okay? Now, let me go to the next one. Expenditure side. We have taken care of revenue receipt side now. We have taken care of receipts, that is revenue receipts and capital receipts. Now let me have a discussion regarding expenditure side. Revenue expenditure as well as capital expenditure. What is the revenue expenditure? The expenditures that are incurred by the government during the day-to-day government activities. I'll give you examples. Have patience. Right, the expenditures incurred by the government during the day-to-day government activities. And whenever you talk about revenue expenditures, these expenditures neither change, right? Neither they lead to creation of the asset, neither they increase the assets of the government, nor they reduce the liabilities of the government. They do not change the assets and liabilities of the government. On the other side, capital expenditures are those expenditures which are incurred by the government to create assets, to increase the assets or to reduce the liabilities. Either to increase the assets or to reduce the liabilities. Right? Many of you will ask me how, what is the meaning of it, etc. Let me show you a picture. Let me show you a picture. Focus on the right side now. Focus on the right side, capital expenditure. Look at the capital expenditure examples. Tell me, because of that, is there a change in the asset and liabilities of Government of India? Just look at them. Just look at the examples and tell me, is there a change in the assets and liabilities of Government of India? Of course, yes. For example, government will spend money and construct infrastructure. Assets of Government of India will change. Government will give loans to the states. Assets, loans are assets for the government. Assets of the Government of India will increase. Right? Government will repay the loans. Right? The loans are basically liabilities. So the liabilities of Government of India will change. Right? So I hope you understand. Right? Capital expenditure, right? Money will be spent. But as a result of this, assets will increase or liabilities will decrease. That is capital expenditure. Come to the other side. Come to the other side. Government will spend money for maintaining law and order. Government will spend money for maintaining law and order. Government will provide subsidies for poor people. Government will pay salaries, right, of employees, right? So all of these, right, interest payment, subsidies, welfare payment, right, or pension payments for the poor people, all of these, right, basically are the expenditures incurred during the day to day government activities. But I'll focus on one component here. Listen carefully, slightly technical. I'll focus on one component. Look at the last component under the revenue side. Look at the last component on the revenue side, grant for creation of capital assets. Right? Very technical here. Let me explain this. Grant for creation of capital assets. Now, what is this grant for creation of capital asset? I'll start using a short form. It is already there. GCCA. Let me start. Right? Let me start with the explanation here. Here is the central government. Okay. Let's start. Here is the central government. Example 1. The central government will directly spend money, construct infrastructure. Right? Point number 1. Example 1. Central government will spend money and construct infrastructure. Please tell me, revenue side, capital side. Revenue expenditure or capital expenditure? Participate. Please participate. Central government will spend money and construct infrastructure. Revenue expenditure or capital expenditure? All of you okay? Capital expenditure? Capital expenditure. Infrastructure, right? Road, right? Tunnel, bridge, airport, whatever it is, capital expenditure. Second example. Central government will give money, grant, give money, nothing but grant, will give money to, let's say, state government. State government will use the money to develop infrastructure. Now, question number one. Has the money been directly spent by the central government to develop infrastructure here? Let me know. Has the money been directly spent by the government of India to develop infrastructure? No. Not spent directly. Point number 2. This infrastructure has been developed by central government or state government? It has been developed by the state government in this example. So when the state government will say, I have developed this infrastructure, that will come under the account of the state government. But here, please tell me, money is given, but do you think this infrastructure will be counted as a part of central government asset? Let me know. Will this be counted as a part of assets of the central government? No. So can I simply say money is spent, asset is created, but it is not under the central government's assets. It will be part of the state government. Right? So this I'll call it as grant for creation of capital assets. All of you okay? Grant for creation of capital asset, which will be kept under the part of revenue account. It will be kept under revenue account. Okay. Now, what is the use of all of it? Let's start. The most important part for you. What is the importance of studying all of it? You'll come across a concept called as a deficits. You'll come across idea called as a deficit, revenue deficit, right? Or fiscal deficit, effective revenue deficit, right? Budget deficit, etc., etc. There are different types of deficits. I've listed 6 types. There are 6 types of deficits. Let's go one by one. But please remember the deficit number 5 and 6. Deficit number 5 and 6 are not calculated today. You'll understand why in some time. Please don't worry. Deficits number 5 and 6, we do not calculate it today. In fact, let me show it to you. Let me prove it to you. This is the document, right? This is a picture from the document published by Government of India. Tell me, Is the fifth and the sixth deficit mentioned in this document? And next year, when you come across budget, you will get these documents, by the way. You will get all these pictures. Right? So tell me, is the fifth, that is a budget deficit, and right, the monetized deficit, is it mentioned, is it given by the government? No. Look at the graph, you'll realize it is not given, which means today we do not calculate monetized deficit, we do not calculate budget deficit. Why? You'll understand in some time what is the meaning of it, etc. You'll understand, please don't worry. Now let me start with the first one, the most simplest, revenue deficit. What is the revenue deficit? And two students are asking, what do you mean by deficit? Deficit means a shortfall. Deficit means a shortage, shortfall, right? That is called as a deficit. What is the revenue deficit? In the revenue account, how much is the revenue expenditure? How much is the revenue receipt? If your revenue expenditure is greater than, I'll repeat, if your revenue expenditure is greater than revenue receipt, it is called as revenue deficit. And in case of India, there is a revenue deficit. Government of India, next year you will get the data. Don't worry, I'll show you the data also. Don't by heart it. Does government of India face a revenue deficit? Answer is yes. Right? There is a revenue deficit. Can we go forward here? Any problem with the first deficit? Revenue deficit is there, which means revenue expenditure is greater than revenue receipts. Now, let me go to the point number two. Point number two within revenue deficit. What is the point number two? Please tell me, having revenue deficit, is it good or not good? Think logically, by the way. Please think logically. Having revenue deficit, is it good or not good? It is not good. You should not have revenue deficit. Why? I'll tell you. There is a market theory, or there is a golden rule in the market. Whenever you borrow, as a government, whenever you borrow, do not use that money for consumption purposes. Use the money for creation of assets. I'll repeat the statement. There is a golden rule in the market which says, whenever the government borrows, the government should not use this money for consumption. Consumption means not assets. It should not use for consumption. Rather, the money should be used for creation of asset. Now, please tell me, if you have a revenue deficit, it simply means you're borrowing money. All of you are okay with this? If you have a revenue deficit, it simply means you're borrowing money. Because let's say your revenue expenditure is 100 crore. Let's say your revenue expenditure is 100 crore and your revenue receipts are 20 crore rupees. What does it mean? You have a shortage of 20 crore rupees. You're falling short of 20 crores, which means you're borrowing 20 crores in the market. But tell me, by borrowing 20 crores, are you creating assets here? Right? Correct. Are you creating assets? No, you are not creating assets. You are simply using this money for providing, right, let's say subsidies. You are providing welfare payments, right, etc., etc. So argument is simple. Revenue deficit should not be there. Revenue deficit should be 0%. Remember this. Revenue deficit should be 0%. And what is this idea of a 0%? Percentage, generally remember this. Whenever you talk about deficits, they are represented as a percentage of GDP. They are always given as a percentage of GDP because it is easier rather than saying you have a deficit of 29,359 crore rupees, which is a very odd number and very difficult to remember, right? Government of India will say we have a revenue deficit of 3.3%. We have a revenue deficit of 4.2%. It is easier to remember as a percentage of GDP. So first one is revenue deficit. Come to the second part, effective revenue deficit. Now, simple question to all of you. When you talk about revenue deficit, in revenue expenditure, did you include grants for creation of capital assets? Let me know. I'll repeat the question again. When you talk about revenue deficit, You're calculating revenue expenditure. Did you include grants for creation of capital assets in as a part of revenue expenditure? Answer is yes. You included. Some of you saying not included. My dear, you have included. I don't know from where you're getting this idea. Did you not include grants for creation of capital asset as a part of revenue expenditure? It is there right in front of your eyes. Yes, you have included. But some of the experts argue that no doubt, this is not asset created by the government of India, but nevertheless, this money will be used for creation of assets. Yes or no? I'll repeat it again. Right? You have included grant for creation of capital assets under revenue expenditure. No doubt, it is not asset created by the government, but nevertheless, this money will be used for creation of asset. So don't you think if you want to talk about revenue deficit, an effective way of finding out actual revenue deficit where no assets are created should be to exclude grant for creation of capital asset. All of you will agree with me? Anybody has a problem? I'll repeat it again. I'll repeat it. Understand this carefully, my dear. Understand it. Revenue side means what? Are you creating assets? Let me know. Revenue side, either expenditure or asset, doesn't matter. You tell me, are you creating assets? No. Answer is no. Second one, grants for creation of capital assets, you have included under revenue expenditure. But is it not leading to creation of asset? GCCA, will it lead to creation of asset or not? Whether done by the center or state doesn't matter. Is it going to lead to creation of asset? Answer is yes. On one side, you are saying revenue means no creation of asset, but revenue expenditure has an expenditure which is used for creation of an asset. So don't you think if you want to find out what is effective revenue deficit, effective means a correct revenue deficit, what is the proper revenue deficit, then you should not include grant for creation of capital asset. Yes or no? Does it make sense to you? That is the reason we have one more type of a deficit which is called as effective revenue deficit. How do I write effective revenue deficit? Two ways. There are two ways that you can write effective revenue deficit. One way, I'll write it separately and I'll start using short form now. ERD, effective revenue deficit. One way is you will write it like this. You will write revenue expenditure. You'll write revenue expenditure minus grant for creation of capital asset minus revenue receipts. All of you okay with this formula? All of you okay? Right? Because this deficit will tell you how much is the actual deficit where no assets have been created. Right? Now the same formula, can I write it like this? Same formula. Revenue expenditure, that is RE, revenue expenditure minus RR minus GCCA. All of you okay with this formula? Has anything changed? Nothing has changed. It's a simple CSAT concept. Nothing has changed. So can I write it further like this? Revenue expenditure minus revenue receipts is nothing but revenue deficit minus GCCA. All of you okay with this formula? Please do let me know. All of you okay with this formula? Right? So either this formula or this formula, both are one and the same. Do not be confused. Both are one and the same. Okay? Right? So have a look at the formula now. Effective revenue deficit, ERD. Effective revenue deficit is nothing but ERD. Is a revenue deficit minus grant for creation of capital asset. Let me go to the third deficit. Fiscal deficit. The third one is fiscal deficit. Now, what is this fiscal deficit? Fiscal deficit is how much is the borrowings of government. How much has the government of India borrowed in this year, which it will repay from consolidated fund of India is basically fiscal deficit. Is it okay? I'll repeat it again. Right? And formula is very simple. If you look at the formula, automatically you'll understand. What is fiscal deficit? I'll repeat it again. Fiscal deficit represents how much is the money that has been borrowed by government of India in this year, in this financial year. That is called as a fiscal deficit. What is the formula? Total expenditure minus non-debt creating receipts. Do you understand the term non-debt creating receipts here? Let me know. Do you understand the term non-debt creating receipts? Right, we have discussed non-debt creating revenue receipts, non-debt creating capital receipts, non-debt creating right receipts. So basically 1, 2 and 3, if you remember the numbers, 1, 2 and 3 will give you non-debt creating receipts. Now in terms of formula, how do you understand the formula? Think of it. If your total expenditure, I'll just give you one example. If your total expenditure is, let's say, 500 crore, and your incomes where there is no repayment liability, the pure incomes that you have collected is, let's say, 440 crore rupees. Is it okay? Your total expenditure is 500, and the incomes that you have collected, pure receipts, no liability, pure receipts, are 440 crores. Can I say the difference between that is nothing but the money that you will borrow from the market? All of you are okay with this? The difference between those two numbers is nothing but money that you will borrow from the market, right? That is how much? 60 crore. This is called as fiscal deficit. The 60 crore this year is called as fiscal deficit. Done? Now that is fiscal deficit. Borrowings of government of India in this financial year is called as fiscal deficit. Next, primary deficit. Slightly technical, please listen carefully. Primary deficit. Now, what is this concept of primary deficit? Let me explain it. Slightly technical, but once you understand, it becomes very, very easy for you. Primary deficit. Now, point number one. Government will borrow. Correct? Government will borrow, which means there is a fiscal deficit. There is fiscal deficit. Now, can I simply say government will borrow maybe because the financial capacity of the government is weaker? Yes or no? I'll repeat it again. Government will borrow because government finances in terms of collection taxes, selling of the asset, etc. Finances of the government are weaker. But what if I say government this year wants to spend money and it is able to generate sufficient amount of money to take care of all of its expenditure? Think of it, right? Just imagine this. This year, imagine government of India wants to spend 100 crore and they are able to generate income, right? Without any debt, income of 100 crore. Don't you think that is a very good financial position of government of India? Finances of government of India are very strong. So strong that whatever money they want, they can easily earn it. Without borrowing, they can earn it and spend money. Which means if the finances are very strong, very, very strong, in imaginary situation, we have not reached that situation. In a hypothetical situation, finances will be so strong, whatever the expenditures, government doesn't have to borrow, they can use their own incomes to spend money. That is one more point. Third point, listen carefully now. In expenditure, there's a component called as interest payment. Correct? In the expenditure, revenue expenditure, there's a component called as interest expenditure. Now, please tell me, this interest payment that the government is doing, don't you think it is because government of India has borrowed in the past? I'll repeat the statement. The interest payment that the government of India is doing in this financial year, can I say it is because government has borrowed money in the past? This interest payment has nothing to do with what government is doing this year. It is purely because government has taken loan in the past. All of you will agree with me with this particular point? Anybody has a problem with this? Let me know. Anybody has a problem with this? Right? They have borrowed money in the past. For that, they will pay interest this year. And this interest payment is not at all associated with what government is doing this year. It is simply because of the past activities. Now, why it is important? Why this is so important? Let me make a point to you now. Imagine government will borrow 100 crore rupee this year. Borrowings, fiscal deficit. Government will borrow 100 crore rupee this year, and out of 100 crores, one example one, out of 100 crores, government will use, let's say, 80 crore rupees for interest payment. Government will use 80 crore rupees for interest payment, and we will use remaining 20 crore rupees for taking care of current year's expenses. Current year's expenses. Another example. Government has borrowed same 100 crore. Out of that, government will use 30 crore rupees for interest payment, and will use remaining 70 crore rupees for current year expenses. Now look at both of the examples. Can I say, please think logically here, can I say finances of government of India in second example is weaker compared to finances of government of India in example 1? I'll repeat it. Right, look at both of the examples. Can I say, again, don't worry about how much they are spending, etc., etc. Don't worry about it. Look at only the numbers. Can I say, based on this data, finances of government of India in example 2 are much weaker compared to finances of government of India in example 1? Many of you will be asking me, how, sir? How can you come to a conclusion? Right? Now, let's say you are spending 1000 crore rupees. Right? Let me add more data. That should be more than sufficient, but let me add more data. Imagine you want to spend this year 1000 crore rupees. Now tell me, in example 1, how much will be your pure incomes? Don't worry about fiscal deficit, that's a borrowing. How much will be your borrowing? How much will be your pure incomes? 900 crores. Your pure incomes are 900 crores. Correct? But please understand the point here. Here also your incomes are 900 crores. Here also your incomes are 900 crores and 900 crores. But the problem that you need to understand is, in example 1, you are taking more money, you're borrowing more money for taking care of previous year's expenses. And you are using only a small part of the borrowing to take care of current year's expenses. Yes or no? I'll repeat it again. In example 1, most of your borrowings is not to take care of your current year expenses. It is to take care of your previous year's borrowing. Whereas in the second example, most of your borrowing that you're doing in this year, it is to take care of your current year expenses, because your revenues are very weak this year. Is it okay? Your revenues this year, how much money you have collected, is lower. That is the reason, to take care of current year expenses, you have been forced to borrow more. So at least now the point is clear to all of you. Which means the finances of the government, if they are very strong, whatever borrowings they have done, they may use only part of the borrowings to take care of current year expenses. If the finances, if your revenue capacity is weaker this year, if your revenue generation is weaker this year, most of the borrowing, you will use it to take care of this year expenditure. You will launch a scheme, you will take this money, use for that. You will provide subsidies for the people, you will use this money, take care of that. So in the second example, your finances are weaker compared to first example. Now please tell me, when you talk about fiscal deficit, does the fiscal deficit number tell you about the strength of the finances this year? Let me know. When you talk about fiscal deficit, when you look at the fiscal deficit number, I'll show you the number here. Right, have a look at this particular table. Don't buy heart. Please don't buy heart anything from this table. Fiscal deficit for the current financial year is how much? Current financial year is 17 lakh crore rupees. 17 lakh crore rupees. Now tell me, will this 17 lakh crore rupees tell you about strength of the finances of current financial year? Will that tell you anything about, right, what is the strength, the revenue generation capacity of government of India this year? No. No, it will not tell you. I'll prove it. Why? Listen to me carefully. I'll prove it. What if I say, I'll give you two examples. What if I say, in example one, government is borrowing 17 lakh crore rupees. I'll take extreme example so that you understand. Government will borrow 17 lakh crore rupees this year just to pay interest payment. Let's say, one example, just to pay interest payment. Okay? Just to pay interest payment. And second example, government is borrowing 17 lakh crore rupees. Out of 17 lakh crore rupees, they are using 16 lakh crore rupees for launching schemes, for providing welfare to the people, for right, LPG subsidy, etc. And remaining 1 lakh crore rupees they are using for interest payment. Now, do not focus on interest payment here. Don't focus on 1 lakh rupee. I'm sorry, 1 lakh crore interest payment. Good. No, don't focus on that. Tell me, don't you think by looking at example 2, you can come to a conclusion compared to example 1? You can come to a conclusion that revenue capacity of government of India in this year is weaker. All of you agree at least now? Revenue generation is weaker for government of India. That's the reason most of the borrowing they're using for current year expenses. Right? That is the argument. That is the argument. So please understand the logic behind the primary deficit. Primary deficit is a fiscal deficit minus interest payment, which shows what? How much of your borrowings, are you using for your past liabilities, and how much of your borrowings you're using to take care of your current year expenditure, right? Current year expenses, how much money are you using for it? Now, based on this, can I say primary deficit is a much better indicator compared to fiscal deficit? Let me know. Right? Can I say primary deficit is a much better indicator compared to fiscal deficit? Because fiscal deficit doesn't prove anything regarding current strength of the current year finances. But primary deficit will tell you. Definitely, yes, primary deficit will tell you. And can I also say, if the primary deficit starts reducing, I'll repeat it. If the primary deficit will start reducing, it shows that the financial or revenue position of government of India is improving. I'll repeat the statement again. Right, last point by the way. If the primary deficit of government of India, or for that matter any state, starts reducing, it simply means revenue strength or the revenue position of the government is improving. Right, that is an indicator. Please be very, very careful. Slightly tricky. Once you understand, it's very simple. Okay. Now this is primary deficit. So next two deficits are there. Fifth and sixth. We'll discuss this tomorrow. We'll discuss 5 and 6 tomorrow. Don't worry, because right, certain questions are there. I want to finish off those particular questions. I want to finish off these questions which we have left out yesterday, so that we can simply say banking is completely over. Okay. Now let's start. I believe, right? Okay, this is over. Right? I believe this is also over. Let's solve. Let's start. Solve this question. Okay, 61% have answered correctly. Why? It should be 100%, my dear. Yesterday we have discussed bank sathis, right? Yesterday we have discussed in financial inclusion, we have discussed concept of bank sathi. Okay. What is or are the facility or facilities the beneficiaries can get from services of business correspondent or bank sathi in branchless areas? Let's start. It will enable the beneficiaries to draw their subsidies and social security benefits in their villages only. Possible or not? If you have a bank sati, can you withdraw your LPG subsidy from the village itself? Of course, yes. Can you get your welfare payment through the bank sati? Yes. All of that is possible. It will enable the beneficiaries in the rural areas to make deposits as well as withdrawals. It is basically extension of the first point only. Yes, both the statements are correct. Right option will be option C, both 1 and 2. Okay. Now, some of you said previous question was not done. Let's solve it then. No issues. Let's solve it. If it is not done, let's solve it. Okay. 49% have answered correctly. Some of you would have made a mistake in the point number 2. I'll come to that. Some of you would have made a mistake in point number 2. I'll come to that. Have patience. Which of the following measures would result in an increase in the money supply in the economy? Purchase of government securities from the public by central bank. Straightforward point. All of you will agree with the point number 1. Anybody has a problem with this? Right? The Reserve Bank, I'm sorry, purchase of government securities from the public by the central bank. Reserve Bank of India will give you money and will purchase the G security from you or from the bank, etc. So can I say this will increase money supply? Yes, answer is yes. Deposit of currency in the commercial banks by the public. Many of you will simply say yes to this, but answer is no. And I'm pretty sure many of you would have made a mistake in the point number 2. Why you feel by depositing money, automatically money supply will increase? Answer is no. Let me prove it to you. Let me prove it to you. Right? Look at the question or look at the explanation carefully. How much is the money supply measured, or how is the money supply measured? M3. M3 is what? M3 is basically the demand deposit, time deposit, and cash with the public. Correct? All of you okay with the formula? Right? M3 is nothing but again other deposits, etc., etc. Don't worry about it. Focus on the most important components. Demand deposit plus cash, time deposit plus cash. Let's say right now, demand deposits worth 200 rupees are there, time deposits worth 300 rupees are there, cash with the public is 500 rupees. So what is the M3 here? How much is the M3? Can I say 1000 rupees? Correct? 1000 rupees. Now, what if I take, I'm having cash. What if I take 100 rupee out of it and put it in a fixed deposit? What if I take 100 rupees cash and put it in the fixed deposit? Now, can I say M3 will become like this? Demand deposit will remain same 200. Time deposits, instead of 300, it will become 400. And cash, because I've taken 100 rupees out of this will become 400. Please tell me what will happen to M3. Can I say M3 will remain same? All of you okay with this? M3 will remain same, right? You're assuming over a period of time. Over a period of time, banks will give loans, etc., etc. All of that will happen. But now, if I take 100 rupee cash, keep it in a fixed deposit, can I say the term deposits will increase to 400? Baba, those are asking how 400. Listen to what I say. You people don't listen. That becomes a problem. Out of 500 rupee, out of 500 rupee cash that I have, I'll take 100 rupee, keep a fixed deposit with the bank. So as a result of this, cash will come down to 400 or not. Those are saying it will become 600, etc., etc. Right? Cash will become 400. And what about the time deposit? Time deposit will become 400 because I've kept one FD. So 200 plus 400 plus 400, money supply will remain same. Right? So second one is wrong. In fact, I'll show you one more question. This was asked last year. I'll come back to this. Don't worry. Solve it directly. Don't waste your time. This was asked last year. Check the papers. If you withdraw 1 lakh rupee in cash from your demand deposit account at your bank, the immediate effect on the aggregate money supply in the economy will be, that is, if you withdraw 1 lakh rupees, what will be the impact on M3? Impact on M3 will be, right, no change. Because now, right, no doubt deposits, that is, the demand deposit will go down by 1 lakh, but the cash that you're holding, cash with the public, will increase by 1 lakh. So reduce by 1 lakh, goes up by 1 lakh, no change will happen. Right option is option D. Does it make sense to you? Right? Any problem? Borrowing by the government from the central bank. You tell me. Right? We have discussed this. Earlier we have discussed this. If central government will take a loan from RBI, let's say we'll sell a government security to RBI, we'll borrow from RBI, will the money supply in the economy automatically increase or not? Yes or no? Will the money supply increase? Of course, yes. Of course, yes. Government will borrow and start spending. Money supply will increase. And finally, sale of government securities to the public by central bank, exactly opposite. Exactly opposite of us, hence are wrong. Right, so 1 and 3 are correct. Right option will be option C here. And instead of this, right, they might give you only one statement is correct, right? Only two statements are correct, etc., etc. Okay. Now, okay, one more question. Solve it. Okay, 51% have answered correctly. Which of the following steps are used for contractionary monetary policy? Contractionary means what? Reduce. Reduce money supply. Contractionary. Expansionary, contractionary. Increase CRR. If you increase CRR, money supply will come down. Right? Yes or no? SLR and CRR. If you change SLR and CRR, money supply will change. You are increasing CRR, money supply will come down. If you increase the repo rate, money supply will come down. And if you decrease SLR, money supply will increase. So it is not contractionary, it is expansionary. So third one is wrong. First and second are right. Right option will be option B here. Okay. So these are the questions. One more question is there. We'll take it up tomorrow. Otherwise, let's solve it. Let's solve it. I'll solve it. Right. Have patience. I'll solve it because time is over. If the RBI will decide to adopt expansionary policy, expansionary means what? Increase money supply. Which of the following RBI will not do? Read very carefully. If RBI will decide to adopt expansionary policy, which of the following RBI will not do? So if RBI wants to increase money supply, it will reduce SLR. It will reduce SLR if they want to follow expansionary policy. If they want to expand money supply, they will reduce MSF. They will not increase MSF. If they increase MSF, it is a rate of interest. We have discussed it in earlier class. I believe yesterday or day for yesterday. So if they increase MSF, it will make it costly for the banks to borrow. Money supply will come down. It will not increase. So definitely yes. Point number two, RBI will not do. Cut the bank rate as well as repo rate. If RBI wants to increase money supply, definitely yes, RBI will cut bank rate as well as repo rate. So using point number 1 and 3, RBI will increase money supply. Point number 2, RBI will not use it to increase money supply. So point number 2, that is option B, is the right answer. Right? Question is, which of the following RBI will not do? Don't get confused. Which of the following RBI will not do to increase money supply? Right. So point number 2, that is option B, is the right answer. Done. So before I wind up the discussion, any questions, any concerns that you have, please do let me know so that we can have a discussion. Then we can close the session for day. What is GCCA? GCCA stands for Grants for Creation of Capital Asset. GCCA stands for Grants for Creation of Capital Asset. What is the use of GCCA? Central government will not directly create the asset by spending money. They will give grant. Grant means a simple transfer of money. Simple transfer of money, right? So central government will simply give money to any other agency. They will construct the infrastructure. That is the concept of a grant for creation of capital asset. Okay. External grants basically, the money is given by various international agencies, right? Money is given, not a loan. Money is simply given for construction or the development or implementation of certain schemes, right? Many of the times you must have come across various grants which are given by World Bank. For example, sanitation projects, World Bank has given lot of grants, and lot of social welfare projects. World Bank has given grants. So grants are given. Grants are given. They are not collected back. So if the government will receive a grant from an external agency, it is not a loan. It is not creating asset also. Hence, we'll keep it under the revenue. Okay. How repayment of loan is capital expenditure. Repayment means you are giving money. Point number 1. Repayment means you are giving money. Means expenditure. By giving loan back, by repaying the loan, is your liability coming down? Answer is yes. Hence, under the capital expenditure. Okay. Deficit. Deficit. I have explained this 2 times already. Deficit means shortage. How much is the shortage in terms of money? If you're spending 100, if you're earning only 80, the shortage is 20 rupees. That is called as deficit. Okay, done. So let me stop the discussion today here. Tomorrow we'll start with the concept of budget deficit. Budget deficit as well as monetized deficit. We'll discuss other concepts as well in tomorrow's class. Okay, so take care. Please read well. Read newspapers every day. This is my advice to you. I'm telling this every day. Today also I'll tell you. Read current affairs. Read newspapers carefully. Keep updating current affairs. Okay, so take care. Have a great day. See you tomorrow sharp at 5 p.m. Good night.